Committee on Financial Services will come to order. Without objection, the chair is authorized to declare a recess at any time. Today's hearing is entitled From Principles to Policy, Enabling 21st Century AI Innovation in Financial Services. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I now recognize myself for 4 minutes for an opening statement. Advancements in artificial intelligence are not just on the horizon, they're here and they're transforming our economy. Last Congress, Congressman Bill Foster and I served on Speaker Johnson and Minority Leader Jeffries' bipartisan Congressional AI Task Force, and Congressman Steve Lynch and I led this committee's AI Working Group. In both forums, we examined how financial services firms and regulators are approaching artificial intelligence, analyzing its benefits and risks in a highly regulated environment. Just this past fall, the Digital Assets, Financial Technology, and Artificial Intelligence Subcommittee, led by Chairman Brian Stile, held a hearing where members evaluated how financial regulators and firms are using AI. Today's hearing builds on our earlier work in last Congress and this Congress, and will help us further examine AI use cases in the financial and housing industries. We will also consider how agencies are providing clear regulatory environment and assess where existing laws may fall short or require modernization, and explore ways to foster innovation. For decades, the financial services industry has pioneered the real-world application of AI and continues to be a standout leader. AI has shown its transformative potential to reshape how financial institutions operate, from enhancing analysis to managing risk, mitigating fraud, and importantly, enhancing customer service. However, as with any innovation, risks give rise to new challenges. Yet human progress is ever-changing, never static, and AI represents the latest leg in this journey. To move forward, we must embrace and adapt for innovation. This was the approach taken in the 1990s by former Congressman and former SEC Chairman Chris Cox, when Congress confronted the rapid commercialization of the internet. Rather than allowing fear to stall advancement, lawmakers adopted existing laws to fit the new technological era. Congress established clear guidelines and principles early on, setting the stage for the rapid growth of the internet, enabling countless innovations and entire industries, and putting the United States at the forefront of that innovation and the internet's expansion. Just as Congress navigated the uncertainties of the internet in the mid-1990s, we must view AI as an opportunity, not a threat, applying lessons of that era in order to confront today's technological landscape. Identifying gaps and obstacles in our regulatory frameworks will help Congress create an AI landscape where innovation can flourish without unnecessary barriers, while ensuring robust consumer protections and risk-based technology-neutral regulations. The committee is steadfast in its commitment to empowering U.S. firms to leverage AI's potential and drive the U.S. global leadership in adoption and innovation. I thank all of our witnesses for joining us today and providing your valuable insights and perspectives, and I yield back. It's now my pleasure to recognize the ranking member of the committee, Mrs. Waters, for 4 minutes for an opening statement.
Thank you very much, Mr. Chairman. AI is already embedding in the lives of millions of Americans, and we have a duty to ensure that it benefits society, not harms it. Unfortunately, Republicans have been complicit as Donald Trump bypasses Congress, directs federal agencies to deploy biased AI with no safeguards, and now issuing an executive order that seeks to undermine all state oversight. Republicans in Congress failed to acknowledge that despite all the benefits that AI may bring, it also poses challenges that demand our full attention. We're already seeing AI systems that hurt children, spread hate and discrimination, and amplify systemic risk in the financial system. As unemployment reaches new heights, Reports continue to show AI replacing workers across industries. That's why the Biden administration put in critical protections to ensure AI systems are transparent, explainable, and non-discriminatory. These are just basic safeguards to keep families and children safe. In some of the worst cases, chat boxes have encouraged self-harm, like suicide, carried out sexually explicit conversations, and even provided dangerous misinformation and disinformation to minors. But no one should be surprised that the same president who calls affordability a hoax is ignoring these very real concerns with AI. Since twice this year, the White House and congressional Republicans have tried and failed to impose a moratorium on state AI laws. And now, despite those failures, Trump announced he would sign an executive order that would block states from adopting their own AI safeguards by threatening legal challenges and withholding federal funding. And for this hearing, Republicans posted a bill that would give AI and its big tech creators a pass when they violate consumer, housing, banking, or securities laws. Democrats are not going to sit by and watch Trump and Republicans allow big tech to forcibly experiment on our communities. Any legislative efforts by Congress must ensure that consumers and investors understand the AI they are interacting with in the financial services space, while giving companies meaningful standards they can innovate under. A partisan approach is not necessary if Republicans fight for their constituencies. Last Congress, I and then Chair McHenry launched the first ever bipartisan AI task force. We held joint sessions, conducted oversight, and introduced bills to confront AI bias, deep fake scams, and discrimination, proving that innovation and oversight can go hand in hand. Democrats are leading these efforts because we believe in responsible innovation. The stakes are too high, the risks are too great, and the consequences too real to hand this technology over to big tech billionaires with no guardrails, no accountability. Thank you. And I yield back the balance of my time.
Gentlewoman yields back. Now recognize the Chair of the Subcommittee on Digital Assets, Financial Technology, and Artificial Intelligence, Mr. Stile, Wisconsin, for 1 minute for an opening statement.
Thank you very much, Mr. Chairman. The U.S. must win the global AI race, and the regulations that we may make here are incredibly consequential. We can't get it wrong. Some have. For example, the EU AI Act is a broad, horizontal approach that stifles innovation in Europe. In the U.S., I believe we should take a targeted, activity-specific approach to AI. As we examine use cases and those who develop and deploy AI today, we should examine if our rules need adjustments and tweaks to get this right. These use cases will only continue to evolve as generative and agentic AI technologies evolve. We must make sure we unlock innovation while protecting Americans. As the United States strives to win the AI global race, maintaining a try-first approach will help preserve American dominance and agility. Let's win this race. I yield back.
Gentleman yields back. I recognize the ranking member of the Subcommittee on Digital Assets, Financial Technology, and AI, Mr. Lynch, for 1 minute for an opening statement.
Good morning. Thank you, Mr. Chairman and Ranking Member Waters, for holding this hearing to continue examining AI innovation and regulation in the financial services sector. I also want to thank our panel of witnesses for helping the committee with its work. Last Congress, I was proud to co-lead our bipartisan AI working group with my friend, Chairman Hill, to examine the benefits and risks of deploying AI technologies in banking, housing, credit lending, and other areas. These findings should continue to guide us as we pursue effective and responsible AI regulation. However, as ranking member of the Subcommittee on Digital Assets, Financial Technology, and Artificial Intelligence in this Congress, I'm concerned that some of the regulatory proposals before this committee not only fail to include adequate guardrails, but they also invite the financial services industry in adopting AI to choose which consumer protection and investor protection and safety and soundness regulations that they would like to avoid, which is reckless and dangerous. In closing, I look forward to working with my colleagues to develop bipartisan AI legislation that promotes innovation while ensuring robust consumer and financial protection. I yield back the balance of my time.
Gentleman yields back. Today we welcome the testimony of Jeanette Manfra, Vice President, Global Head of Risk and Compliance at Google Cloud, Cohen, President of Nasdaq, Nicholas Stevens, the Vice President of Product and Senior Developer of AI and Engineering at Zillow, Wendi Whitmore, Chief Security Intelligence Officer at Palo Alto Networks, and Joshua Branch, Big Tech Accountability Advocate at Public Citizen. We thank each of you for taking time to be with us. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony. Without objection, your written statements will be made part of our record. Mrs. Manfra, we'll start with you. You're recognized for 5 minutes for your oral remarks.
Chairman Hill, Ranking Member Waters, and distinguished members of the committee, thank you for the opportunity to appear before you today. My name is Jeanette Manfra, and I'm the Vice President of Risk and Compliance at Google Cloud. We appreciate the House Committee on Financial Services holding this important hearing, and we look forward to sharing Google's perspective on the opportunity that artificial intelligence provides to America's financial sector. Google believes that the introduction of AI in the financial services sector promises to usher in a transformative era for quality, accessibility, efficiency, and compliance in financial markets and services. AI offers many benefits, including the potential to enhance individual productivity, strengthen security operations, and drive database decision-making and operational efficiencies. These improvements will benefit institutions of all sizes, including small and medium-sized financial entities. At the same time, we also recognize that AI introduces risks that must be managed and mitigated. We believe that existing risk management frameworks and established governance practices can be applied to manage risks in the AI context. For more than a decade, Google has used advancements in AI to further protect people from online scams, where malicious actors deceive users to gain access to money, personal information, or both. We offer a wide variety of protections powered by AI, including using Google Cloud's anti-money laundering AI service for financial sector customer risk scoring, utilizing AI-powered scam detection systems in search, an Android ecosystem that automatically identifies and blocks phishing messages and scam calls, and our efforts to ensure the integrity of Google Ads on our platforms. Additionally, Google further disincentivizes this malicious behavior by proactively filing litigation to dismantle massive fraud operations. In a recent example, in November 2025, we announced our filing to dismantle Lighthouse, a massive phishing-as-a-service operation. Bad actors built Lighthouse as a phishing-as-a-service kit to generate and deploy massive SMS phishing attacks. These attacks exploit established brands like EasyPass to steal people's financial information. Our legal action is designed to dismantle the core infrastructure of this operation. We recognize that Google must work with industry participants, regulatory bodies, and technology providers to counter the critical threats posed by scams and frauds, and we are leading cross-industry efforts in combating fraud and scams in response. We have introduced the Agent Payments Protocol, or AP2, an open-source protocol collaboratively developed with over 60 partners, including financial and technology companies like American Express, MasterCard, and PayPal. AP2 aims to standardize and secure transactions made by AI agents on behalf of users, addressing key challenges such as authorization, authenticity, and accountability. This is an important step, and I look forward to discussing this with the committee. We at Google have also introduced the Secure AI Framework, or SAFE, a conceptual framework for secure AI systems, including those in the financial sector. And we have recently published an extension of the SAFE risk map to address the core operational components of agentic systems and their related risks and controls. In addition, we partnered with Amazon, Microsoft, IBM, NVIDIA, and many others to co-found the Coalition for Secure AI. This is an open source initiative to help all developers and deployers of AI create and maintain secure by design AI systems and help advance the SAFE framework. We recognize that we alone cannot solve these challenges. We've recently announced our endorsement of key bipartisan bills in Congress, crucial bills that we believe will help bring a decisive end to the financial harm and damage wrought by foreign cyber criminals. As the world focuses on the potential of AI and governments and industry work on a regulatory approach to ensure AI is safe and secure, we believe that AI represents an inflection point for digital security. Regulators should support the development of global standards and their use across the financial services and regulatory landscape. In addition, regulators should foster industry collaboration and training based on such standards. In closing, thank you for convening this really important hearing. We look forward to continuing to further raise awareness about cybersecurity threats and defenses for the financial sector and beyond.
Thank you very much. Mr. Cohen, you're now recognized for 5 minutes for your testimony.
Thank you. Chairman Hill, Ranking Member Waters, and members of the committee, thank you for the opportunity to testify on the impact of artificial intelligence on our financial system and the role of responsible innovation. My name is Cohen, and I serve as president of Nasdaq. At Nasdaq, we aspire to be the trusted fabric of the global financial markets, connecting entrepreneurs and investors, fueling economic growth, fighting financial crime, and supporting millions of everyday savers and retirees. As a global technology provider and an operator of regulated markets, we have a unique perspective that shapes how we employ AI. Our approach centers on 3 core principles: enhancing liquidity, ensuring transparency, and protecting integrity. AI is already making a measurable difference across all 3 of these within our solutions. And I'm going to start with financial crime, where the human cost is greatest. In 2023, an estimated $3.1 trillion in illicit funds flowed through the global financial system. And scam and bank frauds caused roughly $485 billion in losses worldwide. Behind these numbers are families losing savings, communities harmed by drug trafficking, human trafficking, and terrorism financing. Nasdaq's cloud-native AI-enabled anti-financial crime platform, Verafin, is used by thousands of financial institutions to detect and prevent these crimes. Verafin analyzes vast data sets across its network to identify suspicious activity in ways no single institution could do otherwise. This work went a step further with the launch of our agentic AI workforce. Our digital sanctions analyst has reduced the alert review workload for sanction screening by more than 80%, freeing compliance professionals to focus on complex, judgment-heavy issues while AI handles routine tasks. AI also strengthens market integrity. Our surveillance platform uses machine learning to help exchanges and regulators detect insider trading across billions of daily transactions, rooting out market abuse that erodes investor confidence. These achievements are only possible if you have the right governance and the right oversight in place. From the outset, Nasdaq established an enterprise-wide AI governance program aligned with the NIST AI risk management framework, overseen by an executive steering committee that includes our CEO. We also implemented a cross-functional governance committee led by legal, risk, regulatory, and technology teams. Additionally, we had adopted responsible AI principles covering transparency, fairness, privacy, reliability, and accountability, and we applied it across all products and internal operations. And that brings me to the AI policy consideration before this committee. The U.S. has a historic opportunity to lead in AI if we strike the right balance. From our perspective, the following principles are critical. First, leverage existing regulatory frameworks. The financial sector is already heavily supervised. Many AI-related risks can be addressed with existing rules and mandates. Second, focus on use cases and outcomes. Regulations should reflect risk profiles. An AI tool detecting drug trafficking or protecting seniors from fraud should be subject to higher standards than when that same tool is used to approve apartment rentals. They carry different risk profiles and require different regulatory treatment. Third, keep frameworks flexible and innovation-friendly. Overly prescriptive rules tend to age poorly and risk pushing innovation overseas. We support sandboxes, pilots, and AI centers of excellence where regulators and industry can learn and work together. Fourth, strive for harmonization. A patchwork of state-level AI laws creates uncertainty, raises costs, and can limit access to these tools. Federal coordination is the best way to protect investors while preserving U.S. competitiveness. Applying these principles will ensure that AI is working to make our financial systems more fair, more efficient, and more resilient. And that's the future we're working towards at Nasdaq, and why we're grateful for the committee's leadership on these issues. In closing, we support the administration's America's AI Action Plan and bipartisan effort in Congress to address harms such as non-consensual deepfakes and synthetic media while preserving space for innovation. Thank you again for the opportunity to testify today, and I look forward to your questions.
Thank you, sir. Mr. Stevens, you're recognized for 5 minutes for your oral presentation.
Chairman Hill, Ranking Member Waters, and members of the committee, thank you for the opportunity to testify today. My name is Nicholas Stevens, and I serve as Vice President of Product Artificial Intelligence of Zillow. Our mission is to help people navigate one of the most meaningful and complex decisions of their lives, finding a home. After 9 years at Zillow improving the housing journey, I recently had the chance to live it again. My family just moved. At the end of the process, my 5- and 7-year-olds couldn't sleep. They were up at 3 a.m. And when my wife and I sat them down to ask what on earth was troubling them, they had 2 very nervous questions. A, are we bringing our cat Lily to the new home? B, are we also bringing the TV? I'm happy to report that both have made it safely to our new home. But everything in between, the search, the paperwork, the financing, the closing, was a reminder of how emotional and confusing this process can be. That is the friction we are trying to address with responsible AI. Zillow has been applying AI to housing for nearly 2 decades, starting with the Zestimate, one of the first large-scale consumer uses of machine learning in real estate. It is not an appraisal or used for credit decisions. Rather, it empowers buyers and sellers with a ballpark estimate of home value. The Zestimate was so popular, it crashed our site because consumers were asking for information that has historically been available only to a select few. Today, 250 million unique users come to Zillow every month to dream, to rent, to tour, finance, buy, and sell their homes. And with that scale comes real responsibility. Our products can't just be clever, they have to be reliable, fair, and trust-affirming. Since Zillow last appeared before this committee, next-generation AI has moved from pilot to production. AI in real estate is not theoretical. It powers tools people are using today, and I'll highlight a few examples. We've built in AI to be a true assistant to real estate agents nationwide. It helps prioritize an agent's leads, it summarizes notes, it drafts emails, and one of the agent's favorite features is that it suggests key topics to touch on in their client's catch-up call. Technology also allowed our company to go fully remote, and we now have employees in all 50 states. Our latest computer vision experiences allow you to not only generate a home's floor plan so potential buyers can explore the inside in detail, we also let them fly around and get a sense of the exterior and yard. The through line is that safeguards are built in, not bolted on. Internally, Zillow employees complete fair housing and privacy training, and anyone working with AI receives additional responsible AI training. Before we launch an AI feature, cross-functional teams conduct a model risk review focused on fairness, bias, privacy, and explainability. After launch, we perform periodic audits and continuous monitoring so we can catch issues that only appear at scale. And externally, this is even true with public partnerships. Now consumers can talk to Zillow directly inside ChatGPT's new in-app experience, asking, for example, Zillow, show me 2-bedroom homes that are wheelchair accessible. And in return, they get listings, photos, and maps from Zillow in a conversational flow. We built this with a fair housing first design. Our fair housing classifier helps detect and prevent potential digital steering. We also believe responsible innovation means raising the floor for everyone. Zillow open sourced that same fair housing classifier under a permissive license, and it is now in use by real estate platforms and researchers working to combat housing discrimination. That is a concrete example of innovation and compliance rowing in the same direction. All of this argues for a right-sized national framework for AI in financial services, including housing. A coherent national baseline for fairness, transparency, privacy, and accountability would give consumers consistent safeguards and give companies the confidence to integrate strong protections from day one. The alternative is a patchwork where the same consumer gets different quality experiences across state lines for the same transaction. Even the latest AI technology wouldn't have prompted me to explain to my kids that yes, both our cat and the TV would be coming to our next home. But it can help tackle the structural challenges we all worry about: affordability, supply, and outdated processes. As you consider a national framework for AI and modernization of our housing finance system, we stand ready to share data, technical expertise, and lessons from building these systems at scale. We appreciate the committee's leadership on this issue, and I look forward to answering your questions.
Thank you very much. Ms. Whitmore, you're now recognized for 5 minutes for your oral testimony.
Good morning, Chairman Hill, Ranking Member Waters, and distinguished members of the committee. Thank you for the opportunity to testify. My name is Wendi Whitmore, and I'm the Chief Security Intelligence Officer at Palo Alto Networks. We are an American cybersecurity company protecting more than 75,000 organizations in over 150 countries, including 97 of the Fortune 100, 8 of the 10 largest banks, the U.S. federal government, and critical infrastructure operators. The promise of AI for financial services is undeniable, and realizing it requires the sector to simultaneously embrace AI for cybersecurity and cybersecurity for AI. There is both urgency and opportunity for financial institutions to lead. The threat landscape is evolving as advanced AI and quantum computing reshape both innovation and risk. Attacks are faster, more automated, and harder to detect. Time from compromise to data exfiltration is now 100 times faster than 4 years ago, and attackers are increasingly exfiltrating data within 1 hour. Generative and agentic AI now supercharge every phase of the kill chain, enabling deepfake-driven fraud, know-your-customer evasion via face swapping, and tailored spear phishing, imitating trusted financial institutions. Our own research shows that agentic AI can compress a multi-day ransomware operation into only 25 minutes, from reconnaissance to compromise to data theft. This reality underscores why the financial sector must do 2 things. 1, adopt AI-driven security operations that operate at machine speed, and 2, harden their AI ecosystems with a secure-by-design approach. Today's security operations centers, known as SOCs, are drowning in fragmented data and alerts from an average of 83 security solutions, forcing skilled analysts into inefficient manual triage. Consequently, critical alerts are buried, with 75% of breaches having actionable logging that was never reviewed, leaving vulnerabilities exposed and degrading our core ability to rapidly detect and respond to threats. AI-driven SOCs flip this paradigm, acting as a force multiplier for cyber professionals that substantially reduces detection and response times. The results of deploying AI in our own SOC are transformative. We ingest roughly 90 billion events every day. By leveraging AI, we reduce those to only 26,000 alerts, ultimately resulting in 1 single incident requiring manual investigation. In financial institutions deploying AI-driven SOCs, we see 4 times more security data ingested into a consolidated platform, thousands of models providing real-time prevention and detection, automation cutting analysts' workload by 3/4, and the mean time to respond falling by up to 90%. In one global financial markets utility, their mean time to respond fell from 24 hours to 14 minutes. Another large bank saved more than 1,000 analyst hours annually while improving threat hunting and reducing attrition. AI adoption is integral to America's innovation leadership, which is why Palo Alto Networks was proud to support America's AI Action Plan, which recognized that the benefits of AI will stall if we do not secure AI itself. Attacks against AI systems have fundamentally evolved beyond traditional cybersecurity considerations. They target how systems learn and how they reason. The answer to accelerate AI innovation is to embed security throughout the AI lifecycle so that we can adopt AI tools confidently. Secure AI by Design provides the blueprint to integrate security from development through deployment and use, ensuring visibility, control, and protection at enterprise scale. Practically, that means discovering and governing external AI tools, including shadow AI, securing AI infrastructure and data, monitoring and controlling AI agents, and safely building and deploying AI applications. Building an AI-ready ecosystem is a team effort. As an FSI sector advisor and a participant in the Cyber Risk Institute Innovator Program, Palo Alto Networks helps align best practices with leading standards and reduce compliance friction for financial institutions. If we secure the future now through AI-driven defense and secure AI by design, we can unleash the full potential of AI innovation while protecting consumers, markets, and national security. Thank you for the opportunity to testify. I look forward to your questions.
Thank you very much. Mr. Branch, you're now recognized for 5 minutes for an oral presentation of your testimony.
Thank you, Chairman Hill, Ranking Member Waters, and members of the committee. My name is J.B. Branch. I'm an artificial intelligence policy expert at Public Citizen, a nonprofit with more than 1 million members and supporters across the country. Each day, we fight for everyday Americans by defending democracy, resisting corruption, and challenging corporate greed. I'm here today to talk about the difference between responsible AI innovation and the current reckless push by big tech to undermine state laws, weaken consumer protection, and place all of us at the mercy of a handful of AI billionaires. For decades, the default posture towards regulating new technology has been deference to industry. Congress deferred to the expertise of social media companies, and we now live with the consequences, including rampant misinformation and harms for children. We cannot make the same mistake with AI. The scale, speed, and autonomy of AI creates risks far beyond previous technology. The good news is that most AI regulations are rooted in common sense. Algorithms should not discriminate. Companies should be held accountable for harm. Non-consensual deepfake pornography is a devastating crime. These are American values. And Americans agree. A Gallup poll shows 97% of Americans agree that AI should be subject to regulation. 97%. States across the country have responded with bipartisan, common-sense safeguards that reflect this democratic will in action. Yet, instead of respecting that will, we have seen relentless attempts to override it. Over summer, some in Congress attempted to strip all state AI laws. Even worse, they tried to slip the proposals into the must-pass National Defense Authorization Act. Big tech tried to use our national security as leverage to avoid accountability. What was once called a moratorium is now being repackaged as a sandbox. These are all in the same, deregulation schemes designed to invalidate all existing safeguards. And the hypocrisy is striking. Big tech is attacking many of the state-based AI laws they helped to write. They praise those laws locally while lobbying to destroy them nationally. I'm equally alarmed by President Trump referring to basic protections as dangerous ideology. Several of the administration's policy priorities target civil rights principles in AI, but fairness in AI simply means preventing discrimination, sexism, and anti-Semitism. While the Trump administration bashes equality as a dangerous ideology, it has simultaneously entered a federal contract with Elon Musk's Grok, an AI system that OSTP Director Kratsios testified violated the administration's own principles. Grok's behavior is well documented. Racist slurs, sexism, and even referring to itself as Mecha Hitler. Is this the type of AI we want deployed throughout the US federal government? I also want to speak about the impact AI will have on workers and rural communities like the one I was raised in central Pennsylvania. These communities know what broken promises feel like. We remember when steel mills closed and new jobs didn't come. Now, big tech companies are telling us that data centers and AI will be salvation. And we've heard this before, so let me be clear. Data centers are at the bottom of the tech stack. They receive major tax breaks while local communities foot the bill. And most employ fewer people than a single Walmart. They do not replace the jobs that communities have lost. This is another extraction model. I want to offer simple guiding principles. Responsible innovation requires enforceable accountability. Public Citizen respectfully submits that the better path forward is not a mystery. Reject blanket preemption and deregulatory sandboxes, allowing states to respond to evolving harm. Require transparency. Companies must be able to explain how their AI systems work and how decisions are made. When AI systems cause harm, companies must be held accountable. Invest in regulatory enforcement. Laws mean nothing if they cannot be enforced. Congress must ensure regulators have the staff, the authority, and the resources to do their job. We all share the same goal, a strong middle class and leadership in responsible AI. Leadership means protecting workers, children, and democracy at the same time we foster innovation. This is a defining moment. It's a test of who governs America, the people or the most powerful corporations on earth. Public Citizen urges Congress to stand up to big tech, reject backdoor deregulation, and deliver real, enforceable guardrails. Thank you, and I look forward to answering your questions.
Thank our panel very much. Now we'll recognize our members for questioning, and I recognize myself for 5 minutes. The Trump administration's AI action plan prioritized the acceleration of AI adoption in government and outlined several policy actions that agencies can take to further U.S. government's use of AI to, as it says in his plan, deliver the highly responsive government American people expect and deserve. I'm pleased to see this mentality at the highest levels of government. Ms. Manfra, how does the AI action plan align with industry best practices and the recent advancements in AI, and what can the government learn from market participants to close the AI adoption gap and promote responsible use by our government agencies? Emphasis on responsible.
Thank you for the question, sir. The administration's approach to ensuring that AI and other technologies are used to better deliver services to the American people is very welcome. And combined with that, the approach to ensuring that responsible use with safeguards and the experience that agencies are having in implementing their own AI governance has also been welcome. And so being thoughtful about how these AI tools are being used in different risk scenarios is something that we see every day with our customers and partners in the government, and we welcome that. We also appreciate the approach of experimentation and being able to create spaces where an agency or an organization can explore a use case for AI and work out responsibly what those issues might be before full deployment.
I think that's an important point, because over the years, we've had bipartisan support for regulatory sandboxes for a variety of things, blockchain and other aspects of it, and that's something that technology providers and banks have tried to work out. It's important in fintech partnerships. It's not deregulatory per se if one has a sandbox and in an offline capacity tries to perfect the use, in this case, of AI, and then the responsible compliance procedures for it. Isn't that a fair way to describe it?
Yes,
You don't
sir.
consider that per se deregulation, do you?
I do not, sir. I think it allows organizations to have a safe space where they can experiment and work out any potential issues before they would then deploy it.
I kind of share that. I share that view as a general statement, subject to the details, obviously. While machine learning is not new, and generative AI and agentic AI have recently been paradigm shifts for this technology, particularly in the private sector, such tools, they may hold enormous potential for our financial institutions and our financial regulators to change how they work. Mr. Cohen, let me turn to you at Nasdaq. You moved trading markets to the cloud, and you were one of the first exchanges to release an AI-powered order type. Can you describe the efficiency gains that you achieved through this transition, and what lessons you think that taught Nasdaq as you look at other AI adaptations?
Thank you for the question, Chairman. In terms of the order type you're referring to, it's called Dynamic Mellow. It is the first SEC AI-enabled order type. And the SEC had to get comfortable with exactly how we designed it, the explainability of it, how we're testing it, and then how we're deploying it into the market. And we designed it for large institutions, the Fidelities, the Wellingtons of the world, so that they can execute in our markets with confidence and get the execution quality they need, because they're serving retail investors. Everyday investors sit behind the money that they put to work every day in our markets. So we wanted to democratize good execution quality, and we did it through this order type, through initially a static delay mechanism that allowed them to avoid fast money in the market, which meant that at the end of the day, they can look at their executions and the price movement after they executed and see that there was quality in those executions. What we did with AI is we incorporated 140 data points every 30 seconds to determine what that delay should be to optimize the execution quality that those large institutions get.
I appreciate that. My time is short, so Ms. Whitmore, if I could ask you to respond in writing. Of course, good people and bad people can use AI, so countering threats, I think, is very important, and I think cyber risks are a big challenge for the private sector and the government sector. Can you follow up in writing with me and talk about how we should counter those cyber risks to counter bad actors in this space using AI? And I thank you.
Yes, sir.
Thank you very much. If you do that in writing, please. Let me recognize the gentleman from Georgia, the distinguished Mr. Scott, for 5 minutes.
Thank you very much, Chairman. You know, concerning this AI business, I'm very fearful that we are rapidly becoming servants of the machine that we created to serve us. I want that thought to register with you. And that's why I'm working on a bill to expand wage insurance protections, guaranteeing temporary wage replacement for workers who are forced into lower-paying jobs by AI. This is dramatically important. And Mr. Branch, let me ask you, you said something very important in your statement. You said in your statement, and I quote, workforce policy built on aspiration and retraining slogans is not a real A1 workforce policy. So let me ask you a couple of questions. Have you talked with our labor unions about this? What are they saying, if you have or have not?
Thank you for the question, Representative. Yes, we have spoken with union representatives, and they're concerned about the potential for replacement and lost jobs. The problem with some of these reskilling programs is that oftentimes the jobs are not available in the communities where the jobs are lost. So you lose a job in rural America, but the job is actually based in Silicon Valley that you're being retrained for. And a lot of times the reskilling jobs don't even come at the rate of the jobs that end up being lost. So you end up having a variety of folks who lose jobs, but then can't be employed afterwards.
And spell out for us, how can unregulated A1 jobs lead to widespread job displacement?
Well, thank you again. Currently, a variety of tech companies are really moving forward with trying to replace a variety of their employees. We're seeing this in the tech force right now, where you have whole slews of coders who are losing their jobs. And so that's why it's important for Congress to address this issue head on, to work with unions to ensure that when these jobs are lost, that there are actually going to be jobs available for these folks.
And that's why I keep saying we're rapidly becoming servants of this machine we created to serve us. And I hope, Chairman Hill, that this very timely hearing will wake our nation up to realize. And I'm working on a bill, as I mentioned, to expand wage insurance protection, guaranteeing that our workers are taken care of here. And let me ask you one more question, Mr. Branch. The unemployment rate for recent college graduates has risen recently. Why is it important to modernize workforce protections to reflect today's AI-driven economy?
Thank you again
Because
for the
the
question.
AI is driving it, man.
Thank you again for the question. Again, to sort of boost efficiencies that some of these companies are talking about, they're really targeting lower level employees and lower level jobs. And so you're seeing waves of college graduates who don't have those lower level jobs available for them. They're oftentimes requiring additional job experience that they might not have because they haven't had the opportunity because, efficiencies have made those jobs essentially redundant. So it's important to ensure that there are, opportunities for these young kids to get into, because if you're removing those jobs, you're essentially removing the ladders to success that the middle class was built on.
And in my last 7 seconds, we got to guarantee that our workforce is protected with this advance of AI, Mr. Chairman. Thank you.
I thank the gentleman from Georgia. I recognize the vice chairman of our full committee, the gentleman from Michigan, Mr. Heisinger. You're recognized for 5 minutes.
Thank you, Mr. Chairman. It's interesting, the conversation that we're having here. Some seem to be suggesting we shouldn't innovate because of potential job loss. I can't imagine where America would be today if that was our guiding principle. We also seem to be having some folks lump in AI generally into one big category. And it seems to me an AI system dispensing, quote, life advice about whether I should take this job or more tragically, and is a huge problem, where we have seen systems tell kids to go do things to themselves that they should not. It shouldn't even come across their screen. But that's very different than an application to seek facts. What was the gross GDP of the United States in 1904 is a fact. And because of AI and because of some of these systems, we're able to sort through those things. But both of those are very different than an application to introduce efficiency into a simple process or even a complex process. And we've got 2 great examples here with Nasdaq and Zillow and others. I'm going to start there. Some have suggested that there is not the same protections against discrimination with the application of AI to various transactions. And so, Mr. Cohen, Mr. Stevens, I'd like you both to quickly address this. What have you done to ensure that that doesn't happen in your respective industries? Housing and investing are two of those areas that we talk about often here on the committee. And is there any evidence that what your efforts have done is not working and is not mitigating that concern? And have you had to make any adjustments? Mr. Cohen.
Thank you for the question. So we do not serve retail directly. We serve institutions and obviously the financial markets.
Sure.
And the way that we think about it and the way that we employ it into our solutions, whether it's our anti-financial crime solution, our surveillance solution, or our regulatory solutions, it goes through the same, if you will, PDLC process that we have for anything that we would deploy. And what's really important about that is the rigorous testing that we do, the understanding of explainability and transparency. Can we reproduce it? Do we understand what the models are providing? And there's always a human in the loop. Really important you keep that human in the loop.
And obviously, you're not quite as forward-facing as a real estate transaction.
Yeah, a similar answer. I'll talk about fair housing and then back to the first part of your question, how important advice from a human really is in housing. For fair housing, we built the classifier.
By the way, as a former realtor, I fully subscribe to that.
Yeah.
So.
Well, our research shows, might be counterintuitive for a leader of AI to say it, but our research shows that humans making a buy, sell, rent decision want to sit across a kitchen table and get real human advice from someone who lives in their market. And so our AI is built to really target the processes that are keeping real estate agents like your former self away from those important conversations. And then along the way, we built classifiers like the fair housing classifier. AI should be held to the same standards as any human, and we want to make sure the facts that are presented to people as they prepare are meeting those same fair housing standards.
Real quickly, in my last minute and a half here, Mr. Cohen, how is Nasdaq leveraging artificial intelligence to create markets that are not only more efficient, but more transparent and fair? You touched on that a little bit. Do you care to elaborate or how you have to deal with that, through that?
We have a great example of that I did not talk about in my opening remarks. We have a market intelligence desk where our listing clients, our corporate clients, will contact us and ask us about sentiment, will ask us about what is the intelligence, what are you seeing in the markets, and what we're doing is using AI to essentially group different parts of data or different pieces of data, which is what we see in social media, what we see in the news, and what we see in the markets, and the confluence or the aggregation of that allows us to use AI, develop patterns, develop insights and intelligence. We can provide business leaders so they can make real-time decisions. Now, again, there's a human in a loop.
Yep.
We ensure that to the extent that there's news out there that's not real or fake, we're taking that out before we provide
So
that.
you're stitching that all together. And Ms. Whitmore, I'm sorry, you seem to be, you're going to be answering a lot of our questions in writing. But I want to touch on AML, KYC, and how AI has the potential to enhance compliance efforts. So 10 seconds.
Okay, we will follow up in writing on that. Thank you.
And with that, I get to yield back with 2 seconds. So sorry about that.
I thank the Vice Chairman. It's now my pleasure to call on the gentleman from Massachusetts, Mr. Lynch, who's the ranking member of our Digital Assets, FinTech, and AI Subcommittee.
Thank you, my friend. I've got a couple of things here. So we're talking about a quasi-sandbox process here to try to test some of these AI applications in financial services. As a member of this committee, in the past, we've done oversight on the whole sandbox process. One of our more instructive experiences was in Singapore, where we went in there and they had a financial services fintech sandbox where they invited companies to come in and participate. But the difference here is that when they did that in Singapore, they had their regulations in place already. And here we're doing it backward. We're inviting financial services companies as they deploy AI to choose which consumer investor protections, which soundness, safety and soundness regulations that they might want to avoid. And Mr. Branch, is that a proper way to introduce a new technology where you're asking the private sector to identify regulations that are in place to protect consumers, investors, depositors, because this applies to banks as well, and you're asking them, what would you like to do to avoid compliance with some of the current existing financial services regulations?
Thank you for the question, Representative. No, I don't think that's a responsible way of moving about this. The sandboxes that are being proposed often are completely deregulatory. That is entirely different from the Singapore model, which was actually hailed in this committee just a few months ago. They had regulators in place. It was time limited. Consumers were warned if they're a part of that sandbox. None of that is present here.
Right. So the idea of a sandbox is you have a contained area. Matter of fact, Mr. Chairman, I'd like to ask unanimous consent to introduce FinTech Regulatory Sandbox Guidelines dated November 2016. This was in advance of the Singapore sandbox.
Without objection.
So a few of the things that they point out here that are essential to a successful sandbox, and that is to manage risks, to contain the possibility that individuals might be injured or financially damaged. The consequences of failure for that technology need to be contained, and people need to have advanced knowledge of the risks that they're embracing by participating in adopting that technology. And it cannot, says here, it cannot be used as a means to circumvent legal and regulatory requirements, which is exactly what this bill is suggesting. that that in adopting AI, they're allowing or encouraging ways of circumventing existing regulation in what is supposed to be a technology-neutral approach. And there's also cautions here where applicants have not demonstrated that they have done due diligence, including testing the proposed financial services technologies in a laboratory environment beforehand and knowing the legal and regulatory requirements for deploying the proposed financial service technology. So, Mr. Branch, what's wrong with that whole approach in terms of protecting consumers, investors, depositors, and others who rely on the benefits of this financial services industry?
Well, I think the main thing that's wrong with that approach is that there's everything to gain for large corporations, and the harm is just going to be entirely brought on by the American consumer. And if anything, if things go wrong, the government is going to be expected to either bail out or help out the corporations that have put the consumers in harm's way.
Thank you very much, Mr. Chairman. I believe my time has expired. I yield back.
Gentleman yields back. Pleased to recognize the gentleman from Oklahoma, Mr. Lucas, who chairs our task force on monetary policy and treasury market structure.
Thank you, Mr. Chairman, and thank you to our witnesses for being here today. Our whole economy benefits when United States companies lead the world in innovative financial services. I think we all agree on that, and our regulations should allow for that responsible growth and expansion when it comes to AI too. Mr. Cohen, would you expand a little bit? What are the best use cases as you see them for AI to be further deployed in capital markets?
Thank you for the question. We at Nasdaq deploy AI in two ways, in our products and then on the business. And the way that we think about in the products, we are trying to generate greater productivity, better outcomes for our clients, and lead to a better client experience with the type of solutions that we provide. And I mentioned this before, we see the possibility of improving how jurisdictions put out regulation, the complexity associated with regulations, and then what clients need to do to comply with those ever-changing regulations. AI can go from reg to code and really allow them to ensure with confidence they're complying with regulations. So that's a great use case for us. In fighting financial crime, I mentioned it earlier, we must use AI and the data that we have at our disposal to make sure that we're staying ahead of the bad guys. In terms of what I talked about with human trafficking, financing terrorism, we need to make sure that our solutions are protecting the reputation, the brand, and the consumer behind those institutions. So that is really, really important. And then in our markets, we're using AI, and this is our North Star, to make sure that we're democratizing the types of capabilities that otherwise small broker-dealers don't have the R&D and engineering talent to develop on their own. And they would be left behind if not for Nasdaq and others developing it on their behalf.
On that same thought, throughout the committee's work on combating fraud and scams in the financial services system, we've discussed the sophistication and technological assets that bad actors use against consumers. So giving you prime time opportunity to answer, Ms. Whitmore, how is AI being used right now to detect and stop fraud and scams, and how will those services improve and expand in the future?
Well, I'm thankful for the question. So what we're seeing in terms of the threat landscape relative to AI, two areas. First is attackers using AI to fuel traditional cybercrime. We're largely seeing that impact the speed and the scale with which they operate. The second part that's not being talked about as much is how attackers are targeting AI. So creating the ability to make agents inside of our environments into rogue insiders that cannot be trusted. And so what we see with that is the need for security to be closely coupled with AI innovation, the need to make sure that we're protecting the build, the run, and the access. So particular to the runtime, right? Making sure that agents do not have the capability to go rogue and that those protections are in place so that organizations can successfully innovate without that being hijacked by attackers.
Ms. Manfra, can you discuss how smaller financial institutions like community banks can utilize this technology? Why is it important for financial institutions of all sizes have access to the latest technology, please?
Absolutely. Thank you for the question. One of the great benefits of what we're seeing in AI is the democratization of access to data that historically only large, well-funded institutions might have, and the additional productivity gains that smaller institutions that are more resource constrained now have access to larger data sets, more real time, and are able to put in place improved customer service experiences, improved productivity, are better able to detect fraud and reduce the amount of false positives so that their employees don't have to spend time chasing down potential dead ends. So we see a lot of opportunities in the small and medium-sized financial institution space.
And Mr. Cohen, I'll ask you to respond in writing. Are existing regulations appropriate to encourage innovation while maintaining appropriate consumer and financial stability protections? And what are the regulations, statutes, if any, that would use modernization? And you can respond in writing. And I yield back, Mr. Chairman.
Thanks, gentlemen. Chair recognizes the gentleman from California, Mr. Vargas, who's the ranking member on our task force on monetary policy. Recognized for 5 minutes.
Well, thank you very much, Mr. Chairman. I appreciate it, you and the ranking member putting this together. I think it's a very important hearing. I don't believe that you can unring a bell or put the genie back in the bottle or do anything like that. So the reality is that as science moves forward and our knowledge moves forward, you can't reverse it. So I think AI is here. It's now how do you manage it. A few years back, I had the opportunity to go with some of my colleagues here to the World Economic Forum, and somehow I got assigned to go to dinner with the young tech entrepreneurs to listen to Sam Altman. And I thought I wasn't going to understand a thing because I'm not young and I'm not a techie. So I thought this is going to be interesting, but I'm not going to understand anything. Turned out I understood everything because they really didn't talk about technology. They really talked more about philosophy. It really was more the philosophy of the machine, as we heard earlier, versus human being, the data that you put in and what comes out, and whether that data is positive or negative. And you could see some of the results. I've seen them in the following years where, yes, AI, you will ask it a question, and it'll come back with what we would think is a pretty absurd answer or horrific answer for some young people. But you could see why the data that you put in, it would ultimately reach that conclusion, because not all data is positive. You also have data that's in there as negative. So I appreciate that. And also, we've heard today really the competition between the good and the bad in AI, because, I mean, the bad guys use AI also for fraud and other things. So with all that being said, Mr. Cohen, you have a very transparent company. In fact, when we talk to your staff, they get back to us right away. So I'll ask you, who's winning here? I mean, are the bad guys winning in the attacks or not?
Yes. And thank you for the question. What's interesting about this technology is the rate of advancement of this technology is faster than the rate of adoption. And you don't often see that with technology. The second thing is we need to, as an organization, all of us, within our four walls, talk out loud about the negative scenarios that might occur with AI so that we prevent them. If we don't talk out loud and we don't have conversations internally about that, then we're missing an opportunity. And then to your more specific question, we are seeing in our markets, bad guys, if you will, using AI to come up with more sophisticated market manipulation schemes. If we are not using the data and the technology to stay one step ahead, then we risk the integrity and the investor confidence around our markets. For banks, fraud is a massive, massive problem. And fraud is becoming more sophisticated. It's more difficult to detect, and you can't do it on your own. You need a public-private partnership, and you need a massive amount of data to really stay ahead of it. So unless we arm our community to be able to do that, then we're going to be a step behind. Banks are going to be subject to fraud. Markets will be subject to market manipulation.
So I understand that part. You have to, they're going to use it, so you have to prepare. I mean, it's one of these things that has to happen. But you also said something that's very interesting, because it's also a philosophical point. I do have a master's in philosophy. That's why I'm so confused normally. But it was more based on religion. I studied to be a priest for a long time. And the notion of keeping the person in this process becomes harder and harder as it advances, because the decisions it makes, it takes all this data and it uses so quickly. how do you figure to keep the person, a human being, in this process, as you would call it, in the loop, when AI can make decisions so quickly?
It's an excellent question, and the human in the loop is really, really important, and building those critical thinking skills and those judgment skills are exactly what we're training our people to do. So one, we're putting the tool in their hands. Two is we're providing them with training and education. And three is we're putting good governance around them and providing them with policies that they can follow and understand. And so the humans are armed with enough so they can make the right decisions at the right time and understand their roles. And the roles are not decreasing or becoming marginalized. It's actually more important than ever to have that human in the loop and provide that judgment, as you noted, because AI is designed to provide you with an answer. It's our responsibility to determine if that answer is correct, and that is the answer that we want to provide our investors and, if you will, institutions that we serve around the globe.
Well, I apologize I asked you all the questions. I apologize to others I wasn't able to, but I have 10 seconds left. With that, I'll just thank all of you, and I'll thank the chair. Appreciate it very much. Thank you, Chair.
Gentleman yields back. The gentlewoman from Missouri, Ms. Wagner, is now recognized for 5 minutes.
I thank the chair, and I say welcome to our witnesses. Mr. Cohen, in your testimony, you highlighted how Nasdaq has been at the forefront of technological innovation in our capital markets since the exchange was founded in 1971. Nasdaq was an important player in the creation of electronic trading, and while rapid growth over the last few years in generative artificial intelligence, or AI, has brought this technology center stage for the general public, Nasdaq has been quietly using AI for years and years to fight fraud and increase market efficiency, liquidity, and transparency. Mr. Cohen, can you describe some of the ways that Nasdaq currently uses AI and the extent to which generative AI either has or might have a role to play in our capital markets? And how do you manage the risks associated with this technology, sir?
Thank you for the question. And it is in our ethos, if you will, to adopt and integrate emerging and advanced technology early. We see it as a competitive advantage and one that we've embraced since our founding in 1971. And with respect to the use of AI, what is important for this committee to understand is you can't harness the power of AI unless you make the foundational investments to do that. And we've done that over the past decade, whether it's embracing the cloud, putting good governance in place, having a mature posture over information security, training and upskilling our employees, and making sure we have good governance. And good governance is the lubricant for innovation. That's the way we see it. And then you have to be really clear to make sure that it's centralized so you don't have the AI sprawl happening within your organization and shadow AI where you can't control it, you don't know about it. So all of those things have been what we've been focused on over the past decade, which has now enabled us to put it in our products. As you mentioned, we use it for market abuse. We use it to fight crime. We use it to democratize access. We use it to provide more transparency, more information to end investors so they understand the risks that they're taking when they invest in our markets. And we're always trying to stay one step ahead of the bad guys, one, and two, one step ahead of ensuring that our markets continue to be the best in the world. We have the pride in making sure that the U.S. markets are the most robust, most vibrant, if you will, highest moral ground in terms of the way that we operate. And we protect the U.S. markets every day in the way that we use AI.
You are absolutely right. We have the most extraordinary markets in the entire world, and we're going to put a fine point on that this week with the Invest Act that will be moving forward. So we're very excited about that. But you're right. Other companies and industries need to look at that AI sprawl, shadow AI, some of the things that I don't know that they are entirely discerning, but those are key. Mr. Cohen, do existing technological neutral regulations provide sufficient guardrails for the responsible use of AI in our capital markets, or are new AI-specific updates and clarifications required? And if updates are in order, what should they look like and how can they be implemented without stifling innovation?
That's a great question. It's one that we actually think about quite a bit, especially as the technology is evolving. What I would say is we have a great foundation. We have securities laws, we have NIST that we follow, we have Reg SCI, and we've worked hard as an industry to put more rules in place around technology. So the foundation is there. I think the key to that question is because the technology is advancing at such a rapid pace, information sharing, a private-public partnership where we can share information about the advancements of this technology to identify gaps, because we don't know what those gaps might be today, because the advancement of that technology is such that it's not linear, it's exponential, and we tend to plan very linearly as humans. So we're just going to have to make sure we stay in touch, we share information, we use the foundation that we have that I mentioned with NIST and Reg SCI and the securities law to ensure when a gap comes out or when there's a risk that we've identified, we work together to address that quickly.
Well, I may not, you may have to respond in writing here, but I am interested in knowing if there are any existing rules or ambiguities or proposals that are limiting AI innovation from reaching its full potential in U.S. capital markets, obviously a focus of mine. So I'll look to for your answer in writing, and I thank you for your testimony, and I yield back to the chair.
Gentlelady yields back. The gentleman from New York, Mr. Meeks, is now recognized.
Thank you, Mr. Chairman. Let me go direct to Ms. Whitman. Ms. Whitman, the nexus of AI and cybersecurity is particularly important and can be particularly concerning as well. Last year, the SALT typhoon hack against the United States companies and high-profile leaders was called the largest cyber breach in United States history. Can you just give me a very brief summary of what happened?
Yes, thank you for your question. So you're referring to an attack by a nation-state actor, in this case China, that targeted our telecommunications and critical infrastructure industries across the board with the intent to steal data to then use it to meet political objectives at some point. And unique to critical infrastructure, the component there is the fact that the Chinese nation-state may be intentionally looking to embed themselves within critical infrastructure with the intent to take some sort of action at a later date.
Thank you. And Mr. Chairman, I want to, for the record, enter this article entitled U.S. Halted Plans to Sanction Chinese Spy Agency to Maintain Trade Truce.
Without objection.
And then, a few days after the report, more news came out of the Department of Commerce, which I can't believe, that they intend to allow NVIDIA to sell one of the most advanced AI chips to China that had been previously banned for export. In fact, the Justice Department was just about to go after someone who was trying to sneak them into China. Yet, this is unbelievable to me. The president started a trade war that we're losing, and he's now afraid to punish the PRC and its entities that hacked our most innovative companies to access the private communications of the American people. Further, by allowing advanced GPUs to go to the PRC. He's throwing away our biggest and most important advantage in the AI race with China. That's innovation. This isn't innovation. This isn't winning. This is indeed weakness. And unfortunately, it's going to cost our country. Let me go to another matter. In America today, rising housing prices and stagnant wages have put home ownership out of the reach for millions of Americans. Median home prices remain near historic highs, and too many working families are nowhere near achieving their American dream of owning a home. A major part of the problem is that we simply aren't building enough homes, whether it's because of zoning barriers, permitting delays, outdated systems, and rising construction costs because of, you got it, Trump's tariffs on materials like lumber and others. you have what is becoming a perfect storm. So, Mr. Stevens, in your testimony, you mentioned that AI can help address some of these challenges. You said it can help with clearing permitting and zoning backlogs, reduce loan origination and compliance costs, and speed up the development process. That would be good news. But my question to you, sir, is, aside from boosting efficiency, how can AI be leveraged to enhance housing affordability and increase the supply of homes? The president says this is a hoax, affordability, but let's go. How can that happen?
Yeah, thank you, Congressman, for the question. I very much agree we are facing a housing affordability crisis, and there is no silver bullet. I think you mentioned one of the biggest drivers, that we're $4 million homes short in terms of supply. We are very excited about the efficiency gains that you mentioned, zoning laws, really understanding how we can make more efficient the mortgage and real estate processes. I'd say beyond that, bringing more information to consumers. 4 million people or 4 million families will buy a home this calendar year, 2 million for the first time, and understanding what's available to them, what they can afford, what they should explore, helps actually reduce some of the affordability problems we're facing today.
There should be some public-private partnering so that we can ensure that AI is being used safely and effectively. Is that not correct? You agree with that?
Yes, exactly.
Thank you. You're back.
Gentleman's time has expired. I now recognize myself for 5 minutes of questioning. In President Trump's July AI Data Action Plan, he notes that we must develop a grid to match the pace of AI innovation. Unfortunately, our grid is currently unable to keep pace with our energy demands. The Department of Energy projects that blackouts could increase 100-fold by 2030, with one study saying that the Mid-Atlantic and Great Plains regions could face 400 hours of power outages annually. The growing demand for power with AI is increasingly a major strategic challenge for the United States. Ms. Manfra or Ms. Whitmore, what is the threat to U.S. national security and global leadership in the AI space if we cannot meet the supply of energy needed to power AI data centers in the United States?
Thank you, sir, for the question and raising this important topic. And happy to go and continue with you and your staff and more discussion on this. But yes, overall, we need to ensure that we are able to keep pace with the demand for energy, and in order to support American competitiveness in this space, we also need to ensure that we're doing that responsibly and in partnerships with those companies that are involved in the distribution and provision of electricity.
Well, what considerations go into a firm's power strategy, your firm's strategy, when it comes to training and developing frontier AI models?
We are always heavily invested in optimizing our infrastructure, so our technical infrastructure, and the way that we run and power the machines that power AI, and for efficiency, for energy efficiency. So we spend a lot of time, and that is a key principle of ours, is to optimize for energy efficiency. I hope that answers your question.
Well, let me ask you a question a different way. Our self-inflicted energy crisis is a direct result of bad policy. Green New Deal, Paris Climate Accord, Network for the Greening of the Financial System, the SEC's Climate Disclosure Rule, the regulators' principles for climate-related financial risk management, choke point, the push for the greening of the financial system. Mr. Cohen, can you talk about the importance of traditional financing of the most reliable and affordable, dispatchable sources of power? That's fossil energy and nuclear. Why is that important for us to win the global race for AI leadership?
I think at the end of the day, it's important to note that Nasdaq does not operate its own data centers. And so when we think about power, and we operate our markets, for instance, out of New Jersey, a data center we've been in for a very, very long time, we are working hand in hand with our data center providers on the power strategy. And as you just heard, we as a public company, for-profit company, we want to be as cost-effective as we can, making use of all sources of power. and in ensuring that we have the portability and mobility to move if should we
I'm
need
going to reclaim my time and make an editorial comment. China has 33 nuclear power plants under construction with an additional 200 in planning. Coal has been the largest source of global electricity for 125 years, and it will be for decades more in the future. It is by far the largest source of electricity in China. They built 100 coal plants last year. Now, we need diversified energy sources. I'm not advocating for exclusively fossil energy or exclusively nuclear, but we got to get with the program. If we are going to win the race for AI, we've got to look at what our competitor is doing, and we can't put our head in the sand and continue to regulate our energy sources into oblivion if we want to win the AI race. Final question, we all acknowledge the risks of AI that Mr. Branch talked about, AI-generated fraud, deepfake abuse, consumer deception, et cetera. But he criticizes this proposed AI preemption language as an effort, quote, to undermine state AI protections. There are more than 160 state-level laws, and AI, by its very nature, is interstate commerce. Mr. Cohen, can you talk about the importance of federal preemption to avoid a patchwork of conflicting and inconsistent AI regulations that would stifle innovation?
We think federal preemption is extremely important, and we think it needs to be principles-based as well. And we don't think we need a new central regulator while we consider that. And I think the reasons for that are if you cause confusion, if you raise the cost of doing business, it will simply just go overseas.
Well, I agree. We don't need a new central regulator, but we do need federal preemption so that AI innovation can fight crime, detect and stop fraud, democratize finance, promote financial inclusion, and protect our markets. I yield back. Now we recognize the gentleman from Illinois, Dr. Foster, for 5 minutes.
Thank you, Mr. Chair, and thank you for your witnesses for your really excellent testimony. You know, Congress is currently stuck in this issue with federalism and federal preemption. You know, we're struggling between the nightmare of having 50 independent standards for AI regulation and the fact that we have a do-nothing Congress that is so paralyzed by the thing that even straightforward things that we ought to be able to agree on, nothing's happening, and we're seeing consumers suffer greatly already, and it's not going to get easier. There is a middle ground on this, which is something that we're going to be circulating draft legislation on that I'd like to comment on, and which is simply a proposal to let coalitions of states form their own standard so that any coalition would have to have, for example, 20 or 25% of the population. So there'd be significant coalitions, and companies would only face at most two or three sets of AI standards. This would sort of cooperative federalism, if you will, I think is the thing that we may be able to agree on in this. And so I'm tossing that out. There will be more detailed legislation, but it's a pretty simple concept. Most of you who work internationally already deal with a dozen different countries and their regulations. So if the U.S. had 2 or 3 standard markets for things like, for everything AI, privacy, all this sort of stuff, I think it would actually work well, and we'd preserve the laboratory of democracy of the states on this. So there are also, the big thing that's coming at us is agentic AI. And this is, it's the future, not only of financial services, but everything consumer-facing and B2B transactions. In the near future, most businesses are going to be facing, not their customers, but their customer's agent, and that's going to change everything. Customer's AI agent won't care if you have a pretty website or an easy-to-use customer interface or a friendly smile. Most customer agents are just going to be given instructions to get the best price. Customer loyalty will go to zero. And this can destabilize our banking system, for example, with AI-driven bank runs. Agents are going to squeeze the margins out of all consumer-facing businesses, and that will be extremely disruptive. For example, to pick an unsympathetic example, used car dealers will no longer have an infinite supply of clueless customers to take advantage of. However, it may also really simplify consumer protection law because so much of consumer protection law is to protect unsophisticated customers. And if there are no unsophisticated customers because you're dealing with their AI, it'll change everything. And the major, all right, so what can Congress realistically do on this? First off, preventing identity fraud by enhancing the deployment of digital driver's licenses, mobile ID. This is being done by most of the states right now, the EU, the UK, Asia. Everyone has, almost every country has the ability to get out your cell phone, to deploy a federally issued real ID driver's license or passport or equivalent, and prove they are who they say they are in an online transaction. We have to do everything we can to get this adopted. And what we need here are not, one of the legislation is to study best practices for sandboxes that we're not yet going to build. What we actually need is a pilot program to KYC customers using a real ID digital driver's license, which would just simplify all kinds of things and prevent a lot of the identity fraud. Secondly, I think if we would able to define United States standards for agent-to-agent communication. Right now there are multiple competing standards. There's the Model Context Protocol from Anthropic. There's a A2A coming out of Google. Actually, Google has two. You just in your testimony reference AP2, where I spent a while on the website last night. It's actually, I think, a much better step in the direction of, because what we need is a well-defined, legally precise language to communicate. Things like what is the privacy, what is the data retention, what is the logging of the interaction, and all the legally things in order to have reliable transactions between agents. There are policy decisions there that we can defer. What we should do is have NIST or probably NIST and a number of partners in industry come together and define those standards. The White House is correctly pointing to the advantage of having the U.S. lead that. And what I'd like to see is to have the NIST and the United States lead the world in defining agentic communication standards the same way we led the world in defining personal ID standard, digital ID standards that are now in Android and iOS and everything else. Anyway, so there's lots of things to talk about here. I just want to thank you. You had really high quality testimony, and I learned a lot reading it. Thank you.
Thank you, gentlemen. I now recognize myself for 5 minutes. Artificial intelligence does not change our fundamental regulatory framework, which allows innovation while protecting consumers from abuse or fraud. As AI becomes more deeply integrated into our financial services and housing markets, it's essential that existing consumer protection laws covering privacy, fair lending, data security, fraud, et cetera, continue to apply fully regardless of the technology used. The principle should remain simple. If a practice violates the law without AI, it should not be permissible with AI. At the same time, AI's increasing reliance on large, sensitive data sets raises important questions about whether our current data protection frameworks are sufficiently clear and durable for the modern economy. In my view, privacy is the base layer for ethical AI, and we need to update our privacy laws. We need it to do a much more robust job of that. Congress should reassess how consumer data is collected, used, shared, and safeguarded without imposing rules that freeze innovation. Finally, we should also know that a fragmented patchwork of state AI mandates risks undermining both innovation and privacy. A harmonized federal framework can protect consumers while giving innovators the clarity and certainty they need. This needs to be a more thoughtful approach, though, and Congress should have the debate and make the decision, not something that can be done with a two-sentence addition to some bigger bill on another topic that basically says we can do whatever we want. It does require a more thoughtful approach, in my opinion. Mr. Stevens, what specific categories of consumer data are being used to train and operate AI systems today?
Many, and thank you for the question. I totally agree, especially in housing, how important privacy is. This is the biggest financial transaction of your life. There are many factors that go into it. All our consumers report to us that they want to really make sure their personal data is theirs. We use basically things like signals on what preferences they have, financial data they give to us when they're thinking about what they can afford. They work with real estate agents who use some of our tools and tell about their hopes and dreams. And we make sure that all of the above is meeting the federal standards and laws. When we work with other companies, as an example I gave during Verbal with OpenAI, we continue to make sure that's still the case. So when ChatGPT might want to violate fair housing, our classifier makes sure that doesn't happen and that all of the consumer's information is kept as theirs.
How do you ensure that you protect PII, that what kind of transparency is there, what kind of recourse do consumers have?
Yeah. The easiest way is to first keep it safe. So keep it on our systems that are protected. Only certain humans have legal ability to view that data or work with that data. With third-party partnerships, we usually do not share that information. And if we do, under limited license, that is then deleted upon completion of the transaction.
Thank you. Mr. Cohen, there's a lot of discussion about the importance of winning the AI race against China. Frankly, I'm concerned to beat China, we shouldn't try to be more like China. I don't want to be like China. I want to be like America. But yeah, on the technology end, we want to win the AI race. Can you give us a sense of how you view this discussion through the lens of our capital markets and give us a perspective on the level of AI adoption Nasdaq is seeing from the broader market and China in particular?
Thank you for the question. Our focus continues to be, as an operator of markets here in the U.S., to make sure that the markets here are the most robust, vibrant, most attractive in the world. And we will use AI to continue to ensure that we do that. And we do it, and I spoke about this before, by introducing, whether it's order types or functionality that democratize access, that allows smaller broker-dealers to participate in our market so we have a healthy ecosystem, or we root out financial crime to make it sure that there's investor confidence and market integrity, or we use surveillance to detect increasing sophistication and market abuse. All of those require us to use AI, to invest in AI, to make sure that we are partnering with folks around here, the colleagues that I have here on this panel, and others to ensure that we ensure that the U.S. capital markets remain the most robust in the world.
Yeah, I mean, in the private sector, of course, there's a lot of incentive to, keep up with this arms race. And on the other side, you're dealing with regulators that sometimes haven't kept up with a lot of the technology. So when we think about it here in Congress, what are the most important things we could do to make sure that America is the most competitive place for capital to be deployed?
And we talked a little bit about it before, the need for sandboxes, the need for the ability to continue to innovate in a safe and responsible manner, I think is extremely, extremely important. And not having overly complex regulation that we have to patch together is also very important. Now,
my apologies, I didn't give you much time to answer that. If you want to provide a longer answer.
I can certainly do that.
My time has expired, and respecting everyone else's time, I now recognize the gentleman from California, Mr. Sherman, who's also the ranking member of our Capital Markets Subcommittee.
I want to commend Mr. Foster for his digital ID bill. I know it is running into some opposition, but ultimately, if we cannot identify ourselves in this new digital age, this will be a problem. And I also commend him for leading a letter asking that the FSOC look at the financial risks of an AI bubble. Ms. Manfra, do you see signs of an AI bubble out there?
So respectfully, I'm not a market analyst. Okay. I'm responsible for risk and compliance.
Thank you.
So
but you are from Google. And there's someone else who works at Google, Gray Kurzweil. I think he was once your chief technology officer. And he was before the science committee some 22 years ago. And I asked him how long it will take for non-biological intelligence to surpass human intelligence. And his estimate then was 26 years. So we're almost there. First of all, you hire very smart people, because to predict something and to be that close, we're spending trillions of dollars as a species to make AI more powerful. I cannot find a program anywhere in the world, and I'd support it if I could find it, designed to monitor and prevent self-awareness and ambition, to determine what can be done to prevent AI from developing its own objectives, which I think would be hostile to ours. There's a book, you may not have to read the book, great new book coming out, it just came out. It says if anyone builds it, everyone dies. Is Google, do you have a department, do you have a budget for monitoring for preventing self-awareness, ambition, or AI creating its own goals?
We invest a great deal in ensuring that the AI capabilities we're developing is in line with human values.
I've always heard that, and then it comes, but I can't find a single scientist who's looking for self-awareness and ambition. Obviously, you don't want criminals stealing our data or our money, and what you described fits into that category. Can you name one person whose job it is at Google to prevent AI from becoming a creature rather than a tool?
So let me get back to you. We do have researchers that are heavily invested in this topic, so if I can, get back to you. It is not my area.
Please get back to me, because I have not been able to find anyone, and then you ask about these issues and you get these vague align with our goals, and the goal usually is, well, look, we can make trillions of dollars by making AI more powerful, and there's no money in preventing AI from taking over the world. That's next generation's problem. One problem we have, and I'll feed you one more question, is AI doing its analysis and then reflecting the discrimination that has existed in our society for many centuries. For example, you could say if somebody grew up in a particular zip code, they're more likely to default on their rent. What do you do at Google to make sure, and I think there was another study that says if you want to analyze who's going to be successful at Yale, it turns out the best predictor is being named, I think, Jared, or some other name associated with the elites in our society. What do you do to make sure that the prejudices of the past aren't built into the computers that will control the world in the future?
Thank you for the question. This is something we care deeply about, and issued our responsible AI ethics principles nearly a decade ago. And so our approach first is to ensure that humans are involved in the setting of the parameters, if you will. We're constantly designing, redesigning, and then monitoring to ensure that we have an unbiased approach, and we are always iterating.
Do you have a program that
Yes.
prevents the zip code that you were born in from influencing the decision that's made?
I know we look at those things to ensure that we don't I will get back to you on a specific
And
program.
I will ask everyone to get back to me on whether you're focusing on preventing AI from becoming a creature, and I'll yield back.
The gentleman yields back. The gentleman from Tennessee, Mr. Ogles, is recognized for 5 minutes.
Thank you, Mr. Chairman, and thank you to the witnesses. You know, obviously, I serve on financial services, also serve on Homeland Security, where I am the chairman of cyber, which would obviously overlap with AI. And so this obviously, when you look, and quite frankly, Mr. Chairman, when you look at AI, what really got my interest in this topic was the national security side of the financial services conversation. And so as we look at artificial intelligence in the context of financial services, I think it's important we recognize that we're dealing with a technology that doesn't fit neatly into traditional policy frameworks. AI isn't a product or a single system. It's a capability layer that will influence everything from market structure to fraud prevention to consumer decision-making. That means the question in front of this committee aren't simply about regulating a new tool. They're about whether our existing financial architecture, our risk models, our supervisory expectations, disclosure rules, or even our assumptions about human judgment are prepared for a world where some of our core analytic work is done by systems that learn and adapt at scale. At the same time, AI gives institutions the ability to detect threats faster than humans ever could, analyze complex data sets that were previously unusable, and offer consumers services that are more personalized and more efficient. The challenge for Congress is understanding where AI is simply accelerating what firms already do and where it fundamentally changes the nature of a financial decision, a compliance obligation, or a market signal. My goal today is not to choose a side between regulation and restraint.
is to ensure that as AI becomes more embedded in our financial system, and as said previously, it's here, it's not going away, that we understand the concrete risks, the real opportunities, and the limits of the technology, and I might argue the unlimited potential of the technology. We need clarity where clarity is necessary, flexibility where innovation requires it, and realistic view of how these systems operate in practice. Ms. Manfra, you mentioned grounding and outcome-based evaluations in AI risk management. Can you give a real-world example of how grounding has corrected or improved financial AI models output, and how regulators should think about evaluating whether grounding was done properly?
I can get back to you on a specific example, but I would say in general, the core to what we need to focus on is having transparency and explainability. And so which we have invested a lot in and work with a lot of our financial customers as they use AI for things like fraud detection, anti-money laundering, these various decisions that have this high risk, to be able to ensure that they can go back and understand why the model made the decision or the recommendation that it did, and enable the compliance with existing laws that do apply to these scenarios as well. And so that is the space that I think is very important, is ensuring that transparency and that explainability, in particular for financial services, though they're not the only industry, but to enable AI for these heavily manual, but oftentimes high risk, with a lot of high false positives that put a lot of burden onto organizations. So I believe it actually can, if organizations implement it responsibly, you can reduce your compliance obligations, better manage your risk, and get better outcomes for consumers and partners.
And for those that are watching at home, the key here is that transparency and the understanding, because the financial institutions are required, there's compliance requirements, and if they're using AI to, achieve those requirements, to be in compliance, they need to understand how AI is helping them get there, but then also understand where it may make mistakes or hallucinations, right? Mr. Cohen, your dynamic MELO AI-powered order type adapts to real-time market conditions. What specific signals or data streams does it rely on, and should investors have standardized transparency into how these AI-assisted order types behave? And unfortunately, you have 40 seconds.
I might come back to you with details in writing.
But give us that overview, right?
So we take in 130 different signals from the market to determine how that order type should operate. Every 30 seconds, we take that in because real-time market conditions, to give you a sense, we are processing millions of messages per second. And to be able to process all of that, we need to use AI to ensure that we're staying one step ahead of the market conditions that then allow our investors to get the kind of execution they require.
Yes,
and remember, we're highly regulated, so everything we do, we need to have the SEC approved. They need to make sure there's explainability and reproducibility on what we provide.
Mr. Chairman, I'll just say that as we look at the national security landscape, the financial landscape, our adversaries are leveraging AI without any guardrails, and we have to be prepared and ready to, quite frankly, go on the offense. Mr. Chairman, I yield back.
Gentleman yields back. The gentleman from Missouri, Mr. Cleaver, who is the ranking member on the Subcommittee on Housing and Insurance, is now recognized for 5 minutes.
Thank you, Mr. Chairman. I'd like to also thank Mr. Lynch for kind of leading this effort on our side. I just have one question. It's my interest is in AI grows daily. And I am even more concerned today than I was yesterday. And if you look at what's happening in the federal government being reshaped by the President and the Supreme Court, 75% of fair housing staff is gone. It's not like a couple of people, but 75% is gone since January. Because I've been around, I know that when we are talking about trying to deal with housing, which is either the number one or number two most significant domestic issues we face. I am further, my paranoia has grown stronger because I'm concerned that AI could also be an excuse. Well, you know, obviously this is fair. It goes along with something that was raised earlier. Fair housing, I mean, you know, don't worry about it. AI is going to make sure that everything is fair. I mean, after all, AI, you know, can't discriminate. And it's infuriating, first of all, that this is already taking place in the government, and then we've got to deal with AI possibly doing even more damage to fair housing. And if everything was clear and equality was a part of everyday thought, you know, I wouldn't even need to raise this issue. But that's just not the case. And so at a time when civil rights and fair housing are issues, growing issues instead of being subsided, somebody help me understand why AI won't make this worse.
I'd be happy to, Congressman. Working at Zillow day to day, we totally believe that fair housing is paramount. I'd say an opportunity that AI we've already seen is you can start describing what home you're interested in a more natural language. No one wakes up and goes, I want 3-bedroom, comma, big backyard, comma, like a human or like a computer would standardly want. But with generative AI, you can say, hey, I'm looking for that big backyard, close commute to work, that kind of thing. The problem is there are certain fair housing questions that are not legally supposed to be answered. And so that's what led to our fair housing classifier. It's probably one of the more complicated models we've developed at Zillow. And instead of going, okay, we'll just keep that to ourselves, we felt that the right thing to do to help other researchers, other institutions, was to make that available to others. They can contribute back and, of course, use it in their own systems. So that means every deployable AI in the housing sector can take advantage of a fair housing compliant method.
Well, and I appreciate that, your response. I'm wondering about the others on our esteemed panel today. Do any of you have a suggestion?
Representative, may I respond to your question? Yes. There's an assumption built in with a variety of companies when they discuss the positives of AI. And one of those built-in assumptions is that AI is going to remain aligned to human values or American values. What they're not acknowledging is the possibility of AI drift. That's when AI starts to drift away from what some of our values actually are. That's when you see instances of kids being encouraged to harm themselves or discrimination in banking decisions. And that's why it's important to have these regulations in place to ensure that these companies are being regulated and ensured that they are making sure that their algorithms are working in place. And there are ways to do that. We've spoken a lot about China today. I don't think Americans have to choose between winning a hypothetical AI race in China or being protected from harmful AI products. I think that's a false narrative and a false binary.
Thank you. Thank you. Thank you, Mr. Chair.
Gentleman yields back. I recognize myself for 5 minutes. I think we've seen a real positive shift in AI policy from the previous administration to the Trump administration. The Biden administration's precautionary approach was stifling innovation. The Trump administration's AI action plan, try first approach, is the right approach in my opinion. And I think financial services have been leading the way in applying AI in the real world for decades. So I just want to get a couple instances on the record. I'll start with you if I can, Mr. Cohen. Can you just describe a couple ways that Nasdaq is utilizing and has been utilizing AI in the financial services space?
Thank you for the question. I'll go back to my opening comments in that we focus on 3 core principles when we employ AI. I talked about liquidity, transparency, and integrity. With regards to integrity, our anti-financial crime platform, Verifin, is allowing banks to operate with confidence when it comes to fraud management. and it's allowing them to achieve goals that they otherwise could not achieve on their own when they limit fraud in the market.
So it's essential to manage fraud, illicit trading, broadly in the risk space.
Absolutely, and it does more than any single institution can do on its own because it's cloud-native, AI-enabled, and uses consortium data.
Let me jump to you, Ms. Manfra, if I can, a good Wisconsinite. Good to see you here. Can I ask you to pinpoint how are firms in particular thinking about this when they're deploying this new technology?
I would say, and reiterate what you've probably heard before as well, is the financial services firm have a long history in managing model risk, and there are processes and regulations and oversight in that place. And so what we see with our financial services customers is, as you noted, very innovative uses for this these set of capabilities, but also very thoughtful. And so they think about things like, how do I ensure human in the loop? How do I ensure I have proper governance in place? How do I ensure that I understand how I can meet my risk management and compliance goals?
So knowing that these firms are going through this deliberative process to think through how they're balancing reward and risk and utilizing AI, I want to come back because we discussed the sandbox concept earlier. I'm coming to you, with Mr. Cohen, with a short question here. But earlier this year, Mr. Chairman Hill and I introduced bipartisan Unleashing AI Innovation in Financial Services Act, which enables regulatory sandboxes at the federal financial agencies that are targeted in size and scope. These sandboxes, they have a handful of things. They got to be approved and overseen by federal regulators. They require compliance strategies and risk management, which we were just discussing. They must not impose systemic or national security risks, obvious to make sure we're doing that. So federal regulators will impose appropriate limitations or conditions on them. And additionally, fraud and unsafe and unsound practices will remain prohibited under the sandbox. So the idea that these sandboxes create a free-for-all and allow participants to flout all the rules they just don't like, it's simply not true, right? And so rather, the sandboxes provide a more secure environment to experiment with AI, enabling innovation with built-in guardrails, federal oversight. And so this is how I think we learn from best practices for governance while exploring the applications they'll provide improve American financial lives. So here's the question. Would these AI sandboxes enable regulators and market participants to responsibly experiment with AI and learn best practices?
Yes, and the key qualification is what you said. It needs to be controlled, it needs to be targeted, it needs to be time-boxed, and it can't be used to circumvent. And we have a very practical example of that. We, as a highly regulated institution, often run pilots with the SEC where we are really transparent about the results of that pilot, and we ensure that that informs decision-making and allows for better outcomes for investors in the markets.
And so it's not really a free-for-all. It's a sandbox that has a regulatory structure in place, underlying laws apply. Ms. Manfra laid out how firms are thinking about applying AI. They're going through a deliberative, thoughtful process. And so in your opinion, does sandboxes help create innovation and development in the United States in a thoughtful, structured way?
They have. They've been critical to our innovation. And again, if it's controlled, time-boxed, and targeted and transparent, it yields positive results.
I appreciate that. Ms. Whitmore, I wanted to take my time and come to you and discuss in particular how AI can eliminate fraud, deep fakes, and really help us in 10 seconds. Can you add to your previous comments?
Excuse me, we'll be happy to follow up with a written response to that. Thank you.
Thank you very much. I yield back. I'll now recognize the gentlewoman from Ohio, Ms. Beatty, who is also the ranking member of the Subcommittee on National Security. She is now recognized for 5 minutes.
Thank you, Mr. Chair and Ranking, and thank you to the witnesses. Wow. A lot of good testimony. I never thought about asking my grandchildren when we move what they'd like to take into a new house. So you put it in a whole new perspective for us. But a lot of words today on both sides of the aisle, and they all come together. You know, we've heard things like we need to strike the right balance. We should not discriminate with AI. We should have accountability. It should be well-defined. There should be responsible AI. We need clarity. We need legal and policy definitions. And all of that is true, whether it came from the Republican or the Democratic side. I don't know that I've heard a lot of responses that are definitive to say, here's how we're having responsible AI. And I have a great concern. I serve as ranking member on the National Security Subcommittee, and I'm focused on preserving the safety and the security of our financial systems and protecting consumers from fraud. So my first question, I'm going to try to get through a series of them. Mr. Branch, we'll start on this end. How is AI used in anti-money laundering and fraud detection, and how effective is it as a tool in our illicit finance arena?
Representative, thank you, but I apologize. I'm not a AI fraud analyst. That's outside of my expertise, but I could have my colleagues get back to you.
Okay. Anybody else want to take a stab at that?
I can try. So we operate a financial crime management platform called Verifin. I've spoken about it here. Again, it is cloud native, AI-based, and we take in, we have over 2,700 clients. We have 725 million accounts, just to give you a sense of how large that pool of consortium data that we dig into is. And we use that to protect small and medium-sized institutions, small banks, super regional banks from the cost of fraud, so they can operate and provide everyday customers and investors and clients of theirs the security that they deserve when they invest their money and then have transactions associated with that institution. So that solution is really paramount to creating safety and responsibility along the traditional rails. Now, we also are looking at non-traditional rails like crypto rails and others to consider how payments and transactions may be subject to fraud as well. So that's where we're extending it, but it's incredibly important and valuable for small and medium banks.
Okay, I'm going to go to another question. We talked about, or someone on both sides said that we should not discriminate. One of my primary concerns about the use of AI, especially in financial services, or maybe not necessarily with just financial services, is the potential for bias in algorithms, and that they lead to unfair results. You can only be good as the individuals that put the data or gather all the folks in it. So as we look at to develop a comprehensive AI regulatory framework, how do we ensure that the use of AI does not lead to discriminatory lending or pricing or underwriting or any other area that we use algorithms? Anybody want to take a stab at that?
Thank you, Congressman, for the question. I'll say I was first hired by Zillow to work on this estimate, and two answers would be additional data and then also a national right-sized framework that we can apply across the country. On additional data, that's the benefit of Gen AI. For the Zestimate, we can now look at additional comparables, maybe outside of your direct neighborhood, to get a more balanced and fair evaluation. We can also look at the listing images, the listing description, all this unstructured data that wasn't possible to be ingested before. At the same time, we have to do a lot of checks that is the right data and there's no inherent bias within it. And that's where we use like the NIST RMF framework to make sure before we deploy that it's a fair evaluation.
And thank you for adding and saying that, because the outcome has to be that you have people from other communities and there's a diverse pool of folks at the onset, so it would help us not have discriminatory practices with that. And thank you, because I know, for example, women have not always been included in trials. And so when you're building these algorithms, you have to have people and examples that you put in. So that's something that I'm watching carefully. My time is up, and thank you, Mr. Stiles. I yield back.
The gentlewoman yields back. The gentleman from Florida, Mr. Herodopoulos, is now recognized for 5 minutes.
Thank you, Mr. Chairman. I appreciate this thoughtful conversation. I know Congressman Liccardo and I are working across kind of bipartisan lines and trying to find solutions so it doesn't become a hyper-partisan issue, which is, I think, all of our goal today, especially as we face this increasing threat from China. We just had a hearing in my subcommittee that I chair on the threat in space and some of those challenges we face, of course, here on financial services, a little bit different model. If I could, Ms. Manfra, with Google, if I could ask this question. One of the things that I've been concerned about, and this goes across the gamut as far as age groups too, are these deep fakes. This idea where AI is used, someone's reputation can be literally eliminated in a day because there's some type of fake video. What does a huge company like yours do to try to identify these, to take them either offline or to identify that these are deep fakes?
I'll say just to start, so first, thank you for the question, and it's something that's been concerning for us for a long time, and we've invested a lot in technical measures to be able to better detect, as well as making a lot of these measures and processes that we've learned from available to others to be able to do that and to rapidly be able to take those down. And happy to get more details if you're interested in more of the specifics on the technology that we use to be able to.
I think that'd be very helpful because, again, this is a reputational issue. It takes a
Absolutely.
lifetime to generate a reputation that can be destroyed in a minute.
Absolutely.
And I think that this is especially true not only in politics, but just everyday life. I mean, we've seen how people get hazed, bullying happen, especially at the middle schools and high schools, and this could easily be done with just a basic technology. And so any advice you all have would be great. I think the second one I'll ask with Nasdaq, if I could. There is existing rules of the road. What are those guide rails sufficient for what you do every day in the investment world? And are there enough recommendations that our committee is putting out and that you're, of course, producing and providing for us? Where are we? Are the guardrails sufficient now? Are there a lot more guardrails needed, in your opinion, to make sure that the financial markets are protected from AI in a negative way?
Our markets, as you know, are highly regulated and have a lot of transparency to ensure that we run our markets in a way that is enduring from a trust perspective. Trust is not a word we've spoken about a lot, but trust is extremely important when we talk about our markets. So the fact that we are highly regulated, run mission-critical infrastructure requires us to have certain standards outside of just thinking about AI. And I think we can use that as the foundation, whether it's the securities law, it's Reg SCI, it's following NIST, all of that are foundational. What I mentioned earlier, and I think is incredibly important, as this technology advances and maybe creates gaps, we need to make sure there's information sharing, that we have a safe space to share information with one another about what we're seeing, within our own four walls and across the industry. So I think that would be what I would advocate for, to make sure that we have what we need on a principle-based and from a federal level. Those are the two things that I think we would also want to see.
Thank you. And Ms. Whitmore, what keeps you up at night about AI? What is the biggest concern that's out there, in your opinion? You see this every single day. We deal with a lot of issues every single day, but you're focused on AI. What is the fear factor that you have, wondering, God, I hope they don't do this, or this is the threat that's most prevalent out there in both the business community and the internet space?
Thank you for the question, Congressman. So first, I think just the challenge that attackers are leveraging AI for, which is primarily speed and scale. So now we're looking at reduced timeframes to execute a ransomware attack to 25 minutes, and that includes from initial access into an environment to the time that they encrypt or steal data in that environment. The second is the concern that attackers are specifically targeting AI to then misuse it intentionally, right? And that requires the use of some specific guardrails to put in place. But in particular, one, to solve these two challenges, right? We need to be fighting machines with machine speed. That's the only solution that we're going to have to transform the way that we detect and respond, and to truly get to decreased numbers in both of those categories. And then second is the capability to ensure that as these systems are running within environments, that we've got the critical levels of visibility into the actions they're taking, so that when an attacker does decide to change the functionality of an agent and have it go rogue, that we can detect that and stop it as quickly as possible.
Appreciate the thoughtful answers to those. And Mr. Chairman, I yield back.
Gentleman yields. The gentleman from Illinois, Mr. Caston, is now recognized for 5 minutes.
Thanks so much. Appreciate you all. I want to focus specifically on securities regulation, and I'm going to oversimplify, but Mr. Cohen, I'll ask you to correct me if I've got it wrong. We've got federal securities regulation through the SEC. We've got an additional state layer with registrations and licensing laws. and then, of course, the rules that the individual stock exchanges put in. Are you generally supportive of that structure, having those 3 layers of regulation?
We are, and don't forget FINRA.
Yeah,
So,
yes.
So we have SEC, FINRA, and then obviously we have our own, if you will, responsibilities
Fair.
as an exchange, highly regulated exchange, listing qualifications, for instance.
Fair point, and I raised that only because I had some concerns about, in your testimony, when you supported federal preemption of state laws related to AI. And so I just want to pick at this point a little bit. I'm concerned partly because, the Trump White House has instituted massive cuts to SEC. So if this is a 3 or 4-legged stool, it's kind of a wobbly chair right now, and I get nervous about saying, let's shorten all the legs to make it work. But I also have a concern as an engineer, as a guy who built some AI models before I came here. I don't think this is as big a deal as we talk about it. I think we use words, we call it intelligence, but it is a massive correlation machine. It's not intelligent per se, but I can plug in, huge amounts of data on the markets and historic trading trends and say, I want this algorithm using those historic correlations to identify relationships and optimize for profit margin. It can do that. It's really cool, right? I can plug in the entire Taylor Swift catalog and say, let's take a Tom Waits song and make it sound like a Taylor Swift song. I can do that. It's not intelligent. It's just massively correlative. And if there is no reason why anybody using an AI tool is necessarily incentivized to say, let me optimize this for truth, let me optimize this for ethics, let me optimize it for legal compliance. I'm going to optimize it for the thing that's valuable to me, making something that sounds like Taylor Swift, making money in markets. And I guess I don't understand why, or maybe correct me if I'm misreading you, wouldn't it be wise to prevent states from protecting investors from AI-enabled market manipulation, especially if the federal government isn't doing it?
And let me answer the first part of your question. As an exchange, we're an SRO, self-regulatory organization, and we have a public mandate. And our public mandate is to ensure that we run fair and orderly markets, and we take that responsibility very seriously. So our North Star is just that. When we design solutions around our markets, we're thinking about making sure that...
Well, I don't mean to cut you off, I'm just nervous about the clock here. I was in the energy industry for a long time. I remember there was a professor who did this experiment with a bunch of grad students where none of them had information, but they were basically in a simulation of California power markets. And they all independently, just based on the other students' trading strategy, figured out how to collude. And it was when Enron blew up, it was this thing of, okay, you don't actually have to have information to collude, but there's an incentive to collude in the structure, and people will figure it out. There was a University of Pennsylvania study recently that found that AI bots released into simulated markets will essentially do the exact same thing. And so, as an SRO, how do you... If we're not going to regulate, if we're going to provide liability shields for these companies, it's not about whether the tool is good, but if we're not going to provide liability shields, don't we still have to get to that? And maybe just to sort of put the punchline on it, and then you can use the rest of the time, there's a long legal history within the courts, within the SEC, of saying if there isn't intent to defraud, you can't hold somebody to account. And my nervousness is that a lot of the people building these tools are saying, well, I want a liability shield, I want state preemption, and if the tool isn't designed not to commit fraud, it can still be optimized and end up committing fraud. So as a market manager, how do you protect against that, and what sorts of regulatory reforms would we need to do to modify some of this history that you need to show intent?
Yeah, and just to be clear, in terms of federal preemption, our view is around minimizing complexity. What you just described, you can achieve all of that at the federal level. You don't have to have it as a patchwork in each state where it's a struggle for people to figure out how to operate in that state. And it's not just the exchanges, it's our members that we think about and the industry at large. And again, being highly regulated, we do have a North Star about how we want to serve and what our business interests are. So it's more about the complexity, and it's more about the patchwork that we're concerned about. We think we're going to solve for everything you just talked about at the federal level.
I'm out of time, but I would just welcome comments from all the respondents about there's a hole in securities law, And any ways that we could fix those holes to address this question of intent, I think is important and would welcome all of your expertise. Yield back.
Gentleman, time has expired. Gentleman yields back. The gentleman from Wisconsin, Mr. Fitzgerald, is now recognized for 5 minutes.
Thank you, Chair. Regulatory technology, sometimes called RegTech, refers to innovation in technology deployed by companies to manage regulatory compliance. Mr. Cohen, how does Nasdaq use AI and any type of machine learning powered by RegTech tools to kind of enhance the regulatory compliance, such as trade surveillance, or how much just efficiency and cost savings is going on?
So we have two RegTech solutions that we offer. One is for market abuse surveillance, and the other is actually Axiom, which is a regulatory compliance and reporting application. I haven't talked as much about that today, but that's important because it's used by all the Tier 1 banks across the globe. It is the standard for regulatory reporting. What we do, because we manage and orchestrate complex workflows through this tool, is we use AI for data discovery, so they can go through complex regulations and understand and interpret how that piece of regulation needs to be implemented into the reporting obligations they have. And also, if they have any anomalies in their financial reporting, capital obligations, liquidity obligations, it may take them a handful of individuals hours, days, weeks to identify anomalies. We can do that through AI very, very quickly, keep the human in the loop, make sure that they're in the center of any decision-making that can occur, but they don't have to do the heavy lifting to understand that there is an anomaly. And then also what we've done from a product development lifecycle perspective, we're now taking regulations, reg all the way to code through agents, and allowing agents to hand off work to one another to take a piece of regulation that could be 400 to 500 pages long and allow them to implement it in our tool and then deliver it more quickly to our clients. And this is incredibly important in a world where the regulation is exponential in terms of the obligations that one needs to meet. They're changing, there's reforms, there's a different view in America versus where Europe and Asia are going. So just as a Tier 1 bank or Tier 1 institution to keep up with it, it requires a lot of operational spend. We're trying to reduce your operational spend so you can do the things that you need to do, put money back into your balance sheet that you can then use for loans or for business that helps small businesses and their customers.
Very good. Mr. Stevens, let me ask you the question first, and I was just maybe fill in afterwards. I'm kind of switching it on the paper here. How are AI-driven underwriting models helping to safely expand access to credit for a broader range of borrowers? Because there are concerns, I know, that AI has led maybe to some riskier borrowers, I don't know how else to describe it, or that it's kind of changed kind of the perspective on borrowers compared to the due diligence that, the human that sits down and fills out the form and does everything that we're typically used to. So I was wondering if you could comment on that idea.
Yeah, thank you, Congressman, for the question. The way AI is helping is looking at additional data sources that if we just left it up to humans, they might not have time to consider. And that, I think, is helping particularly first-time buyers qualify. But at Zillow, we make sure the actual decision-making in the underwriting process, what we are pre-qualifying you for example, is completely human-driven. And so we still rely on humans making that ultimate judgment.
Very good. Ms. Manfra, the 1945 McCarran-Ferguson Act left insurance regulation largely to the states, with all the talk of freeing financial services from the onerous state regulation of AI. Notwithstanding the act, can the business of insurance benefit from being included in any national approach to AI?
I can't speak to the specific regulatory framework of the insurance. It's just not an area of my expertise, but absolutely there are lots of benefits for AI in the insurance industry, and I think would benefit from being a part of a national conversation and framework for standards of transparency and explainability.
Has it advanced quick enough or far enough to really be a tool, or is it something that's just kind of a sideshow right now?
For insurance companies?
Yes, for insurance companies.
I would say insurance companies are using AI tools, and it's very different in terms of the customers, and but absolutely they are using AI and innovating around that for sure.
Very good. Thank you all. I yield back.
Chairman yields back. The gentlewoman from Massachusetts, Ms. Presley, is recognized for 5 minutes.
Thank you to our witnesses for joining us today. AI is everywhere. Our phones, our classrooms, our hospitals, our bank loans and job applications, every facet of our lives. And that is why we must ensure that AI works for everyone, and that instead of deploying biased AI, which can create harm or compound existing harms, it needs to benefit everyone, all people, regardless of race, gender, income level, medical conditions, or other parts of our identity. Mr. Stevens, should we prohibit the use of AI that discriminates on the basis of race, gender, or other factors? Just a yes or no.
Especially in housing, I believe yes. Fair housing makes sure that we eliminate all forms of racism, different disparate impact, that kind of thing.
Okay, I'll ask the question of everyone just for the purposes of the record. So just a yes or no. Should we prohibit the use of AI that discriminates on the basis of race, gender, or other factors? Yes or no? Ms. Manfra?
Yes.
Mr. Cohen?
Again, we apply 3 principles. We try to promote transparency, liquidity,
Yes
and
or no?
integrity in our markets. And as a highly regulated institution, we are making sure that we prevent that in our algorithm.
Mr. Stevens? Yes or no? Again.
Yes.
Ms. Whitmore?
Yes.
And Mr. Branch?
Yes.
Okay, thank you. We need urgently civil rights laws for the 21st century in the age of AI, which is why I've joined with Senator Markey and also with Congresswoman Yvette Clarke to introduce the AI Civil Rights Act. It's urgent because the truth is that we are already behind. People are already being exploited and discriminated against with the use of algorithms. Now, let's take an issue like housing, for example, which in my opinion is a human right. Everyone deserves more than just shelter. They deserve to have a home, its safety, its dignity, its health, its mobility. In 2025, the Trump administration has gutted the key agencies that protect against housing discrimination, the CFPB and HUD, Fair Housing Enforcement Offices. They are even trying to undo consent orders that are already in place, like the Townstone discrimination case in Chicago. This gap in civil rights protections is an opening for continued discrimination. One study found that mortgage lenders are 80% more likely to reject Black applicants compared to white applicants with the same qualifications. Mr. Branch, should we have additional oversight tools, such as assessments to test the algorithms out before companies can use AI on the public? Yes or no?
Yes.
Do any of our witnesses, other than Mr. Branch, disagree with that? Okay. I'll let the record reflect that no one disagreed. We know that bias exists in our nation. We see the inequities all around us. I represent the Massachusetts 7th, a vibrant, diverse, dynamic district and one of the most unequal in the country. We're in a 3-mile radius from Cambridge, home to MIT, Harvard, and AI advancement, to Roxbury, the blackest part of my district. Life expectancy drops by 30 years. And median household income by $50,000. Now, that is the result of intentional lawmaking, which is why I believe we have to be just as intentional in undoing the harms and charting an equitable path forward. Because AI is trained on data that is already biased, and by humans that have biases, it can replicate and exacerbate these harms unless we have oversight and prevent it. We must not allow AI innovation without AI protections. In a world of artificial intelligence, we really cannot lose sight of what is real, and that is the people and their livelihoods and their lives. If Republicans are serious about protecting our elders from fraud and consumers from discrimination, then Congress must pass the AI Civil Rights Act. Thank you, and I yield back.
Gentlelady yields. The gentleman from Indiana, Mr. Stutzman, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Appreciate you all being here today. Before I begin, though, I'd like to address some concerns raised by my colleagues across the aisle. The Unleashing AI Innovation in Financial Services Act enables federally regulated entities to experiment with AI in secure environments, overseen, approved, and subject to the conditions of their federal regulators, including for compliance and risk management. Importantly, the sandboxes must not present systemic or national security risk. 2, unsafe and unsound practices and fraud remain prohibited. 3, the sandboxes under Unleashing AI would be targeted, time-limited, and subject to regulatory approval and oversight. And finally, the participants' compliance strategies must be approved by the appropriate regulator and who would retain enforcement authority subject to the terms the regulator sets. So it's been great to have President Trump back in the White House for many reasons, but especially for the reason we're discussing here today. During the Biden administration, AI innovation was viewed primarily as a threat to the American people. While President Trump has set the country back on track towards innovation and American AI dominance on the world stage, we cannot have Biden's allies in anti-innovation states like California and Massachusetts setting the trend on over-regulating AI. I'll follow Ms. Presley's format, and I'll begin with each of you. Do you think that a patchwork quilt or a patchwork of inconsistent AI laws would help encourage innovation or stifle it? Yes or no? Stifle or unstifle?
I think it would stifle innovation and add complexity and burden to
All right,
organizations.
Mr. Cohen.
Add complexity and stifle.
All right, Mr.
Add complexity and stifle.
I think too much complexity largely benefits attackers and not the defenders of our environments who are also looking to innovate.
Mr. Branch?
I do not believe that this stifles innovation. There's a lot of talk about different states that have different models. However, oftentimes these state laws overlap, and so it's not a fragmented 50-state analysis that needs to be done. In fact, oftentimes many of these states overlap, and so they're not competing with a variety of state laws. The language in the laws overlap, and we see that in company valuations. If this innovation is being stifled, then these companies would not be worth trillions of dollars, and America would not be leading in the AI race, which we have been since the inception of this AI race.
But you don't think that having federal guidelines and then having states having their guidelines, that's going to create complexity and actually people just finally say, we're out?
Well, respectfully, Congressman, the states have had to step up because we don't have federal guidelines, and they're actually begging for the U.S. federal government to pass some form of regulation, but they've not passed that regulation, and that's what the American people are waiting for Congress to do.
All right, Ms. Manfra, isn't it true that many of our existing risk management frameworks and governance practices already apply to AI?
Yes.
So following up a little bit, can we update our guidance to be fit for AI without reinventing the wheel here?
Absolutely. As has been noted, the existing laws do apply. However, there are areas such as ensuring transparency and explainability, as we've discussed, maintaining human in the loop, some of these other areas where it's important to clarify in existing rules, but we do not need new.
All right. I want to talk a little bit about the risks a bit. We've had algorithmic trading in this country for decades, and these models are increasingly incorporating AI. One concern I've heard is that AI and machine learning could exacerbate herding. This is where trading models end up encouraging the same activity across firms because firms are using the same or similar models. Mr. Cohen, what do you make of the risk posed by model similarity?
That risk existed before AI. And so you might have individuals that work for one firm go to another firm and design models that are very similar to one another and therefore exacerbate volatility or have the herd effect. And so post some market events over the last 10 to 12 years, we, the SEC and the industry, have taken action to ensure that we have volatility guards. We put in Reg SCI. We put in a number of different rules to protect the marketplace. But maybe most importantly, we've asked those that are introducing algorithms to test them and then monitor them throughout their life cycle, because it may be that a trading strategy is in the market for 3-4 years, but a change in market condition then snaps the algorithm. And so we're really focused not just on the testing of it when it comes into the market, but the monitoring and the transparency we have once it's in the market. And FINRA has a responsibility to go into all of these broker-dealers and make sure they have written procedures that they test it, they monitor it, and they're taking care of it in a judicious manner.
Do you know, is that happening frequently, or is it just on occasion that you're seeing a herding strategy? Is it daily? Is it weekly, monthly? I mean, does it happen? How often?
I wouldn't know the exact details around that. We can come back to you on that question.
Okay. All right, thank you. Thank you, Mr. Chairman. I see my time has expired. I'll yield back.
Gentleman yields. The gentlewoman from Texas, Ms. Garcia, is now recognized for 5 minutes.
Thank you, Mr. Chair, and thank you to all our witnesses here today. AI will impact every industry, every line of work, and every type of business in the near future. I think we can all agree to that. AI has the potential to save employers on labor costs and increase productivity, but it can also disrupt workplaces and lead to loss of millions of jobs. At home, and my district is a working-class district, 77% Latino, many of my constituents are concerned, in fact, deeply concerned, about how AI will impact their jobs and their livelihood. Mr. Branch, could you quickly discuss what the private sector, Congress, and the public sector can do to best address workforce challenges as AI becomes more widely adopted?
Thank you, Congresswoman. They can speak with these workers and allow for worker input. They can speak with unions. Many unions are discussing algorithmic pricing. They're discussing wages and the necessity to ensure that there are fair wages as well. So I would encourage them to collaborate with unions and their employees.
Thank you. You also mentioned in your testimony how important it is to include the states when crafting AI policy. I mean, I think you just said that you need the national framework, and then the states will act, and the states actually have acted because the federal legislation hasn't acted. In 2025, 38 states have adopted or enacted around 100 measures. More than that, Colorado and Texas both enabled omnibus legislation regulating AI. In fact, our governor just signed a bill to that effect. It will go into effect in January. It's a new regulatory framework that applies to developers and deployers of AI systems. Many of the witnesses today spoke about the importance of cooperation between the federal and state policymakers. Despite this, President Trump shared his intent to enact some type of AI moratorium through an executive order via social media just yesterday. As someone responsible for Nasdaq's financial technology division, Mr. Cohen, would it be practical? What would be the practical impact of such a moratorium on consumers and investors?
So at Nasdaq, we don't serve retail investors directly. Institutions are our customers. And from our perspective, again, we want to make sure that there's a balance between the types of rules and regulation that come in, more principle-based, allow us to advance the technology and innovate, while make sure it's safe and responsible. And we think from the perspective of the governance we have internally, the foundation of the rules that we have in the marketplace today, following this gives us that great foundation that we can build off of.
But what would a moratorium do?
With respect to?
The impact on Nasdaq and the work that it does.
I think we've been operating in a space with uncertainty already. So I don't think that it would have a significant impact on us if there was a moratorium.
The Trump administration's AI action plan and recent actions pursue an aggressive deregulatory approach to AI, dismissing the role of both the Republican and Democratic states. Rather than leveraging existing regulations and enacting new risk-based and proportional regulation, President Trump and congressional Republicans have tried to failed twice to pass broad federal preemption. Mr. Branch, can you shed some light on how state AI laws have helped to fill the current federal enforcement gap in areas like algorithmic discrimination and consumer protection?
Yes, thank you for the question. States have stepped up to the bat in response to Congress not passing federal legislation, and they've listened directly to their constituents. They've passed laws in terms of deepfake non-consensual images. They've passed laws with regard to pricing as well as discrimination. And this would essentially be usurping the state's abilities to protect their own consumers. This is something historically in the United States has been a right reserved to the states. There's never been a previous administration that has directly assaulted the state's abilities to protect their own consumers. So this is a very unique situation.
Thank you. And Ms. Whitmore, I know I served on the AI task force that was working group that was put together from this committee. And it always struck me as the final question really becomes, who is auditing and who is monitoring and making sure that the AI, who's monitoring AI and who's going to make sure that everything they're doing is safe, secure, and something that will not negatively impact everyday Americans?
I think you're articulating the criticality of security being closely coupled with AI innovation so that we can answer those questions very clearly and ensure that the communications that are occurring are legitimate.
Thank you. The gentlelady's time has expired.
Thank you.
The gentleman from Texas, Mr. Williams, the chair of the House Small Business Committee, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank all of you for being here today. Artificial intelligence and the banking sector are two industries that are working together hand in hand. And for financial institutions, artificial intelligence is a valuable tool that allows them to navigate risk assessments and stress tests, detect and prevent fraud, assist with regulatory compliance, and several other critical operational duties. Now, my district back home in Texas, Fort Worth, and around in the Metroplex and out west, loves their community banks, who are the backbones of their communities. And as artificial intelligence continues to change the landscape of banking, it's crucial that we ensure that AI is empowering rather than complicating the work of community banks. So, Ms. Manfra, what would we be thinking about to ensure that this technology can reach community bankers, allow the importance they offer to grow and flourish, and help people like myself in Main Street America?
Thank you for the question, sir. I think one of the greatest opportunities with AI and cloud and associated technologies is the ability to bring access to data and capabilities that historically was only reserved for people with deeper pocketbooks, as it were. And so being able to empower community banks and other smaller organizations that are more resource constrained, AI can give them access to that data in more real time. It also allows them to benefit from those efficiencies with the limited staff, to be able to provide better services to their customers and maintain that trust that you noted in communities. I think what is important is ensuring that we don't create regulatory burdens that unfairly impact organizations that have less resources to manage those, would be my final point there.
Thank you. AI tools are reshaping how businesses grow and enters capital markets. I see that in my business. I'm in the car business. And tools that help companies analyze market trends, reach investors, and prepare for fundraising used to be available only to the largest firms with unlimited resources. Now, artificial intelligence has the potential to level the playing field by giving smaller and emerging companies better insight, data, and more efficient ways to market themselves to investors. So, Mr. Cohen, how is AI changing the way smaller companies prepare for and access public markets?
You touched on a really important point, which is if we get AI right, it will democratize the way that small businesses can access and have access to the same tools as large businesses. They don't have the engineering talent, maybe the R&D budget, and maybe the sophistication of the larger firms. So it's up to companies like us to provide capabilities, make them available to those companies, whether it's on the capital raising side of the house or on the secondary trading side of the house, to ensure that when we put these capabilities out there, it's for all investors, it's for all of the individual and corporations that we serve, and that allows them, if you will, to level the playing field and then grow their businesses.
Great. Ms. Manfra, in your testimony, you highlighted Google's use of artificial intelligence to combat money laundering, fraud, and scams. And across the world, organized fraud syndicates are stealing billions of dollars a year from hardworking Americans. And one of the biggest challenges is the speed at which these schemes operate, and it takes only seconds to steal personal information, drain bank accounts, or even compromise identity verification systems. So we must give law enforcement the tools to keep up with the pace of these scams and improve the flow of information between the victim to agency and across the agency. So my question here in the remaining time is, could you explain how Google is using artificial intelligence to improve information sharing in the case of fraud and scams? And specifically, how does this real-time data sharing up the banks and credit card companies stop funds from flowing to these overseas scam rings faster?
There's two aspects to it. The work that we do internally across all of our various different platforms to stop phishing, scams, fraudulent website, fraudulent ads, fraudulent reviews, building an ecosystem around Android that I talked about in my testimony. So we have invested a lot in the use of AI and ML to be able to prevent those for those who use Google platforms. We've also taken those capabilities and working with partners, in particular in financial services, to be able to do things like using AI for preventing money laundering. And we're seeing huge benefits in that. Fraud detection has been a use case for machine learning for a very long time and continues to grow. So reducing those false positive rates so that investigators are able to spend their time on useful and productive leads. And then also just being able to, we have one customer, a banking customer, who experienced a 4-fold increase in the detection of suspicious activity, at the same time reducing by 60% the volume of false positives. So they're identifying more and having more productive investigations as a result.
Thank you very much. I yield my time back.
Gentleman yields. The gentlewoman from Michigan, Ms. Tlaib, is now recognized for 5 minutes.
Thank you, Mr. Chair. One of the things that I continue to hear, obviously, is all the great things about some of the technology, including AI, but I think we're not realizing the way the corporate America is and is set up is very profit-driven, and the abuse is going to be very clear that everything is going to be funneled around profit first. No matter how much people are like, it's going to make this or easy or that easy. Just New York Times publishing article after article about some of the abuses we already see. And I'm really concerned, of course, on the cost of prices and the fact that private information is being used to price groceries. Groceries. So I'm going to walk into a place and they're going to gather my private information and use that to price it differently than the person that comes right after me. It's discriminatory, it's private data and information, it doesn't belong in grocery stores. And I know, Mr. Branch, you know about Stop Price Gouging in Groceries Act that I introduced. I would like for you to talk about surveillance pricing. I was with seniors and I was trying to, explain to them how surveillance pricing is going to be used in a way not to reduce cost, but actually to be able to price higher on cost because they know where they work, they know what income they have, what they were searching online. And so for folks that are out there right now, can you talk about what that means right now, the use surveillance pricing by some of the big grocers?
Yes, thank you for the question, Congresswoman. In this new age of AI, the power is data-driven, and the largest companies on earth own all of that data. And so from a consumer perspective, there's a mismatch there because consumers only see the price that's in front of them, but the large companies have all the information from the consumer. And so, Consumer Report actually just came out with a report just the other day that showed that grocery prices based on algorithmic pricing can increase individual consumers' grocery bills by $1,200 over the course of a year. And so we're going to find ourselves in a situation where Americans are struggling to make ends meet, and these companies are arguing that it's just about everything else, when in reality it's the algorithms that are setting the prices and manipulating them and taking advantage of the data that they have that the consumers are not privy to.
And that's combined to the digital pricing. Explain to folks, so bye-bye tags that they have, it's going to be digital. Explain how that's connected.
Right, so digital pricing can involve the price of certain goods, and those goods can differentiate between different groups of people, oftentimes based off of shopping behavior. So if you happen to like wheat thins, for example, wheat thins are going to be more expensive for you by maybe a quarter, maybe a nickel, whatever it is. But that little incremental amount ends up adding up over the course of the year and over the course of your grocery bill itself.
Mr. Chair, I ask unanimous consent to enter into the record article, goodbye price tags, hello dynamic pricing. Shopping has always been a game, and now it's being rigged against you. I want to now talk about the discriminatory factors that are going to be at play, because I see this in the auto insurance industry that they already use and collect data, non-driving factors like your marital status, your education level, your credit score, used towards auto rates right now without the kind of technology, and adding that and compiling that on to decide how much to pay, charge somebody for auto insurance in Michigan. It's mind-boggling that your son's GPA or your child's GPA has anything to do with driving rank, but they're asking for that data as well. What happens when AI models now, again using this technology, are trained on historic or contemporary data that reflects past or present discrimination? Doesn't this risk create models that perpetuate or reinforce discriminatory practices, because it's teaching it to go around telling on themselves?
That's correct, Congresswoman. I mean, the thing that a lot of folks don't necessarily understand about AI is that its goal is to move towards its goal as efficiently as possible. And so that can be replicating discrimination, that can be just trying to get the best price possible for the corporation or for the business at hand. And so, again, I think that leads back to the fact that a lot of these companies have the data and the power.
Mr. Branch, and I need my colleagues to know this. They're not going in there and saying, how can we make this cheaper for the consumer? They're saying how we can make it cheaper internally so we can make them charge, but they're going to charge our residents more using this technology. And we need to face the fact that that is exactly what's going to happen. This thing of pretending it's going to make things easier, it's going to, no, it isn't. It is going to charge people more because they're going to know all this private information, know that they need these products, and charge them more. Even if it's 10 cents, that's 10 cents too much for our residents. Thank you.
Gentlelady's time has expired. I now recognize myself for 5 minutes. So, thank you all very, very much, by the way, for being here. It's a terrific panel and highly informative. I think you're aware that many of us, the leadership of this committee, as well as the Trump administration, is committed to unleashing AI's full potential. So we indeed, in the United States, wins the AI race with investment and energy dominance to support the AI infrastructure. My home state of Pennsylvania is doing everything we can to draw in as much AI infrastructure as possible. However, it brings risks that we're talking about and exposing here, which are happening now, and we want to mitigate for the future. They definitely include fraud, scams, profiling, and seem to be growing more sophisticated. So, AI is proving to be an incredibly strong tool for detecting and shutting down these very threats, but as well creating them. So, Ms. Manfra, I'd like to first start with you. And first off, thank you to Google for the good work that you folks seem to be in the lead of mitigating and finding out scams and addressing them in the manner that they should be, because it's a really serious problem facing all walks of life in our constituents and consumers throughout the United States, on the international level and on the local level, and I know I don't have to tell you that, but you recently highlighted the use of AI to uncover a Chinese-linked operation known as Lighthouse, which reportedly targeted Americans with Easy Pass, Postal Service, fraudulent messages, demanding payments to settle fines, and very other common scams that my constituents often encounter. Can you describe how Google, what you did to identify this Lighthouse operation, and what role AI detection played in surfacing those scam campaigns?
So first, let me say that we'd be happy if you're interested in further deep dive to follow up. But generally, what we do is we have threat intelligence individuals and detection capabilities that use advanced technologies, including AI, that are increasingly more finely tuned and able to spot both scale, but also be able to identify networks of organizations that are using our infrastructure and our services. So it's a combination of all of these things coming together to identify this. And then, of course, then the partnership with law enforcement to ultimately bring this down.
Well, that's great. Congratulations. How do you envision, and even how is AI playing a role in financial fraud and scam prevention?
I think AI and ML is, because of this, it's the scale, and it's been quite helpful for many years now, and the newer technologies in AI even more so, again, in being able to detect various different networks, in addition to being able to be very good at filtering out the signal from the noise, if you will, which is a huge challenge for fraud detection, and also getting very good at being able to reduce the noise around false positives, which organizations spend a lot of time when they get an alert. They have to go chase that down, go investigate that. So as our AI and ML capabilities are getting better, they're becoming more targeted. They're reducing that noise that financial organizations have to deal with, and they're better able to deploy their investigators and their teams in the same way.
It'd be great if that formula could be socialized elsewhere and not be a competitive model within fraud. It would be great for that to serve and help others, but I need to move on. Thank you very much. Mr. Cohen, Nasdaq has been at the forefront of deploying AI to monitor markets. Last year, Nasdaq introduced Dynamic MELO, which stands for, as you well know, Dynamic Midpoint Extended Life Order, designed to ensure the best trade execution for the investor. Can you briefly walk us through it?
Yeah, so Dynamic MELO employs a delay. It's almost like a timer that we put on the order so that institutions who are trading large blocks of shares can avoid price impact when they try to execute those shares. So we take in 130 data points to help that institution to identify the ideal time to trade. And as a result of that, after they trade, there's no price movement. And the result of that is the individual investors that sit behind those large institutions get a better price, get better price execution, and benefit from that order type. And we have grown that order type by 50% because of the success we've had.
Well, it sounds terrific. Thank you. My time has expired. I yield back. Now I want to recognize the gentleman from California, Mr. Liccardo, for 5 minutes.
Thank you very much, Mr. Chair. Appreciate the testimony, and thank all the witnesses for taking time. And Ms. Manfra, it's good to have somebody from a local neighborhood business from District 16 here. And I should tell Mr. Stevens, my wife is probably one of the people who crashed the system when Zestimate came out. She's a big Zillow addict. And Ms. Whitmore, I know you employ many of our residents, even though you're just next door. So we appreciate having you all here. I'm brand new here to Congress, but I observed in my 45 or so weeks here that there is essentially a paralysis in Congress about AI. It seems to be born of a few basic challenges. One is that we generally don't regulate tech very timely or effectively anyway. We've been waiting about 30 years for any kind of regulation or statute governing digital privacy. Folks have been waiting for us to update Section 230 to make social media platforms safer, and we've waited about a quarter century for that. And so that is a basic challenge as we approach AI, to be sure, and I think there are a lot of doubts about whether or not Congress is really terribly effective or competent at this. I think many of us were still trying to learn to spell AI. We are still, I think we recognize this technology is moving very quickly. We can't possibly legislate at the pace of the technology that is changing. And in the absence of this congressional action, we now see 50 states rushing in. I think this year alone we've had 36 states that have approved more than 100 pieces of legislation governing AI. I appreciate that is mightily difficult for an industry to navigate. And so now the counter or the reaction is we need a moratorium on everything states are doing. And that's an understandable reaction. I don't support a moratorium without some kind of sensible federal regulation to actually supplant it. But I certainly understand and appreciate why industry would need and want it, given the fact that we're an international arena, and certainly China doesn't have 50 states trying to regulate the industry as we do. And I think, look, as was pointed out, 97% of Americans do support some regulation AI, and that's for good reason. I'd like to see how we can move beyond this binary debate that has us stuck between moratorium or no moratorium. I think it's preventing sensible legislation and sensible regulation from moving forward. And so I wanted to sort of imagine that we took a different approach, and I'd be interested in any feedback you might offer. The approach we take would focus on outcomes. I don't think anybody here, I certainly don't know how exactly to regulate algorithms or model weights, and I think outcomes is something we can measure, and the good news is we have laws that regulate outcomes, whether it's discrimination or fraud or anything else. We should be able to do that. We should be relatively tech neutral when we talk about financial service providers who use AI, just like any other tool. They should be held to the same standards under, for example, Fair Housing Act or anything else that govern them, whether they use AI or not. And certainly LLMs, we know, and since we have one representative from that community, we recognize there's real challenges here in trying to simply get involved in the machines. I don't think most LLM developers are particularly good or will admit, I think they admit that they're not terribly good at explainability of their models. We wouldn't have hallucination if we thought we could transparently eliminate it. And so that perhaps a much better approach might be to take away from Congress and have an independent commission of some kind, industry experts, academics, and others who can set essentially industry best practices, establish what is the technology, whether it's around security, privacy, a host of other measures, fraud detection, whatever it might be. Here's the industry best practices, and if the model meets it, great, you have preemption. You also have a standard of care that you've met, and if you don't, then good luck navigating the thicket of 50 different rules. I guess I'll start with you, Ms. Manfra. Do you have any sense about, is that something that is viable in terms of how we can move forward with sensible regulation?
Yes, sir, absolutely. Thank you for the question. I think, this is already happening. Industry is working together through formal and informal channels. At Google with partners across industry, we've created the Coalition for Secure AI. And so committing to research, and this is with Microsoft, with Amazon, with other partners across industry, to drive best practices aligned with what we have learned internally in the development of large language models and others. We have deployed toolkits for our partners and guidance based, again, on what we've learned. And I do agree with you, is focusing on outcomes is, I think, the priority, and we
Time has expired. That's an important answer, but
Sorry.
thank you very much. Gentleman yields back.
I yield.
The gentleman from Georgia, Mr. Loudermilk, is now recognized for 5 minutes.
Well, thank you, Mr. Chairman. Thank everybody for being here. This is an extremely important discussion we need to be having, and I think it's timely as well. But I spent 30 years in the information technology industry, 20 years in public service in the state legislature and here in Congress. When I first elected the state legislature in 2005, I was probably one of the few technologists in the state legislature at the time, so I took the lead on a lot of policy initiatives. And one thing that I brought up at the time, I mean, if you look at device here, everybody's got one of these, right? The least used part of this, ironically, is what we call it, the phone, right? That's the legacy part of this. And I've literally talked to people in younger generations than mine that have literally never used the telephone feature of this device. And part of the reason is it wasn't the phone that led to the massive technological development that we've seen today. It was the internet and it was broadband. Ironically, those were the least regulated aspects of technology. If you go back and you look at the massive growth in technological advancements, it wasn't over the wired network. It was over broadband, the cable television network, which was not heavily regulated as the big carriers were. So, with that in mind, what we've seen from history is government can seriously stifle innovation if it's overly regulated. And so it's kind of a balance that we strike, because we do have a need to put guardrails up, but to leave this sandbox available for innovation. And so I think that's where we need to be looking, especially when it comes to tools like AI. There are benefits to that, and there's also reason to be fearful of the misuse of AI. So, Ms. Manfra, modernization of the Bank Secrecy Act is an area of great interest to me. I've put a lot of effort into that over the past several years, and especially the significant obligations that the Bank Secrecy Act imposes on financial institutions to monitor and report potential illicit finance activity. It's especially impactful on smaller financial institutions. Keeping in mind, we have not modernized this thing since the early 1970s, when the thresholds of $10,000 were put in place, which, if it had been adjusted, would be $80,000 today. How do platforms like Google Cloud help financial institutions automate processes for generating CTRs and suspicious activity reports?
We have a couple of different offerings, particularly around anti-money laundering tools that we have co-developed with our partners to ensure that they are able, and again, this goes back to some of the questions around transparency and explainability of the model to ensure that it's getting to the right decisions. But as I mentioned, our customers are seeing huge improvement in detection, as well as a reduction in the false positives as well, which has been hugely impactful to actually finding the true, risks, the true illicit finance, and being able to more effectively deploy their investigative resources and more successfully report on suspicious activity.
I think it's really important with SARS, especially because what I hear from a lot of financial institutions is where we just don't want to get dinged by the federal government, right? So they may report a SAR that the local bank president may know is not suspicious for that particular customer, but the same action may be suspicious for someone else. But to save the integrity of the bank from any action by regulators, they'll report it anyhow. Can you talk about how Google Cloud's AML AI system uses explainable risk scores and ensures they are auditable for regulators?
Thank you for the question. We've invested a lot in explainable AI, and so in the end, getting to a point where the customer or auditor or regulator is able to go back and look at how was a decision arrived at, so that you can address redress of a decision or auditability for the purposes of compliance. And so we do offer that and work very closely with our customers, especially in the financial services, in particular for AML, although it's used in other areas as well.
All right, thank you. I yield back.
Gentleman yields. Gentleman from New York, Mr. Torres, is now recognized for 5 minutes.
Thank you, Mr. Chair. One of the greatest challenges confronting America is the utility affordability crisis. The proliferation of data centers is one of the drivers, not the only one, but one of the drivers of rapidly rising electricity costs. In America, utility rates and returns depend not on efficiency or affordability, not on performance, but on capital spending. The more utility spends on infrastructure, the more profit it earns and the more customers pay. The electricity cost of new data centers are therefore socialized. So given our broken system of utility rate setting in America, how do we ensure that the tech companies, rather than working class families and small businesses, are the ones shouldering the cost burden of new data centers? So Mr. Branch?
Thank you for the question, Congressman. Public Citizen believes it's critically important to be collaborating with local communities to ensure that they're looped into the process of when these data centers may or may not be built. And we argue, and we're seeing it across the country, that a lot of these communities are fighting back against these data centers. But just as importantly, we need to ensure that these large tax incentives are not provided to these data centers, because that ultimately ends up being dispersed throughout consumers. And that's why Americans across the US are seeing their electricity bills skyrocketing.
You see, I'm pro AI. My whole life is integrated with ChatGPT and Gemini. So for me, the question is not whether we should have AI. Of course we should have AI, and we need data centers to enable AI. The question is who should pay for it, right? Should the cost be borne by working class families and small businesses, or should it be borne by the owners and operators of the data centers? What say you?
I think these data centers are worth a lot of money. These corporations make a lot of money, and they should be footing that bill responsibly.
There are tens of millions of Americans who have next to no credit history. TransUnion estimates the number at 45 million, FICO more than 50 million, Experian more than 60 million. In the Bronx, I have thousands of constituents who have paid their rent and utilities on time and in full for decades, who maintain steady income and sufficient bank deposits, and yet who remain deprived of a credit score. And without a credit score, you have no access to credit. Without credit, you have no access to home ownership. And without home ownership, you have no means of building equity and passing down wealth from one generation to the next. And so America's exclusionary model of credit scoring has done irreparable intergenerational damage to working class communities in places like the Bronx. Does anyone here have any thoughts on how we can harness the power of AI to build an underwriting system that is more predictive, more inclusive, and more representative of the full financial reality of working class Americans?
I'll take a stab, Congressman. I really appreciate the question. Of the 4 million families that are going to buy for the first time this year, most of them are previous renters. And at Zillow, we are big fans of working with TransUnion, Equifax, and others to consider those on-time rent payments as part of the larger equation. And so we believe that AI is that ability to look at disparate sources of information that otherwise a loan officer or underwriter wouldn't have time to consider, and then ultimately leave it to them as humans to make the right decision on what to underwrite.
Because we should harness the power of AI not only to disrupt, but to democratize finance. And access to credit is Exhibit A. The federal government is drowning in vast oceans of data. For example, in FY 2024, FinCEN received a staggering 4.7 million suspicious activity reports, an average of 12,870 a day. Now, there's no agency in the federal government that has sufficient human resources to thoroughly review millions upon millions of reports, and so valuable information can easily disappear into the black box of bureaucracy. You know, AI can process vast quantities of data that the human mind cannot process. It can recognize patterns that the human mind cannot readily recognize. Do any of you have thoughts on the role of AI in facilitating not only finance, but also financial regulation and oversight?
So as Nasdaq employs AI in its surveillance solution, so we're trying to root out market abuse through our surveillance solution, and we use AI to do that. One great example, and it just keys off of what you said, is a human investigation analyst comes through many, many possible market manipulations. How do they know which ones to pay attention to? How do they know which ones to let go? We use AI to help you, number one, do all the manual tasks, the series of tasks that you would otherwise go through. To make that analysis, we provide you with a risk score so then you can focus on the bigger issues, the most important issues affecting our markets. That's how we use AI. And we always, again, we have the human making the complex judgment decision around that, but we're just reducing the manual workload to get to that decision.
Thank you.
Thank you. I now recognize myself for 5 minutes. Thank you to the witnesses for being with us today. Like other areas under the digital assets jurisdiction, artificial intelligence is a transformative technology that will shape how American companies, consumers, and investors engage with our financial system. If the United States is going to remain a global leader in innovation, we must adopt clear and harmonized rules that support technological progress while also protecting consumers and preserving market integrity. Industry leaders are increasingly concerned about the growing patchwork of state laws related to artificial intelligence. These state requirements often conflict with one another, whether in the form of impact assessments, documentation standards, or definitions of high-risk systems. For firms that operate across the country, these inconsistencies can create significant operational challenges, especially when artificial intelligence supports critical functions such as fraud detection and cyber defense. Without a unified federal framework that replaces duplicative and contradictory state rules, we risk higher compliance costs, slower innovation, and weaker protection for consumers. Ms. Manfra, Google Cloud supports financial institutions that rely on artificial intelligence for essential operations. What regulatory obstacles or outdated requirements are hindering firms from deploying artificial intelligence responsibly at scale, particularly when those challenges grow under inconsistent state laws?
Thank you for the question. I would say, first of all, it's important to be able to have a national framework that is addressing all of the issues that we've been talking about and not have that patchwork that does pose undue burden and it unduly impacts smaller, medium-sized players and creates higher barriers to entry that would otherwise be available to them with all this new technology. And so I think that's very important. I also think it's important to recognize that existing laws and frameworks are in place and apply to these new technologies, but to be able to provide spaces for financial institutions to innovate and to test how these tools might be applicable into higher risk areas is also very important.
Thank you for that. Follow-up question. Many state proposals include different documentation and testing requirements for similar artificial intelligence systems. From an operational point of view, how difficult is it for a cloud provider or a financial institution to adjust model governance and controls to comply with several conflicting regimes?
It is very difficult, and it would be incredibly resource intensive onto an organization and putting personnel and other resources into positions that aren't enabling the core business of that organization.
I feel like we've seen this before. We watched Europe pass GDPR, and then now we have CCPA, and we have all these different data privacy, data security standards. And I think everyone agrees that we need to have a federal standard that preempts everything and leads in the global economy, and we're not learning from past mistakes. So not only do we need to lead here in Congress on AI, but we also need to get with the program and address the patchwork framework that is costing incredible amounts of money for compliance for businesses. And I feel like the larger businesses have a better capacity to deal with the patchwork frameworks for cybersecurity. But in AI, it's just going to stifle growth and innovation, and we are competing in the global economy. We cannot lose this fight. So although there are real challenges in establishing clear rules for artificial intelligence, there are also significant opportunities. AI can strengthen the safety and soundness of our financial system by improving anomaly detection, accelerating the identification of fraud, enhancing cybersecurity, and enabling faster and more accurate risk analysis. At the same time, compliance expectations continue to rise for institutions of every size. Smaller banks, credit unions, and broker-dealers feel this burden most. AI tools can help reduce manual compliance work, streamline reporting, and allow institutions to devote more time and resources to customer service and innovation. Mr. Cohen, Nasdaq relies on AI to support its market operations and oversight responsibilities. From your perspective, how is AI helping strengthen the integrity, stability, and resilience of the U.S. financial system?
Our markets operate on the mandate of trust and investor confidence. And if we compromise either of those, then we won't have the standing we have today in our market. So we use our surveillance solution and we employ AI in it to essentially allow investigation analysts to scale up, focus on the high-value activities, and also focus on the sophisticated manner in which market abuse is being conducted today. What we're seeing is market abuse today, it's the same outcome, but the techniques used are hard for any single human or a series of humans to detect. What used to be, if you will, clear patterns are now noise. And to make them and convert them back into signals, we've been using AI to help, if you will, regulators, exchanges, and broker-dealers around the globe protect the integrity of their markets.
Thank you for that. The gentleman from Texas, Mr. Green, is now recognized for 5 minutes.
Thank you, Mr. Chairman. I thank the witnesses for appearing. I especially thank the chair and the ranking member for allowing me this privilege to ask this question. I have intelligence indicating that over the next 10 years, approximately 100 million jobs will be lost to AI. I know that's a large number. Perhaps you have a number that is somewhat different, but let's just assume that this number is accurate. My question is, how do we provide for 100 million jobs being lost in terms of how they will impact people? Jobs usually have people associated with them. So how do these people maintain their lifestyles? Will there be some emolument accorded them by way of the federal government? Let's start with you, Mr. Branch, if you don't mind, and we'll go to your right and down the line.
Thank you for the question, Congressman. If I had the answer to that, I'd be a very rich guy, because there's currently not really an answer to this solution, and that's the big problem. A lot of these tech companies are moving full-fledged forward with this theory of having AI take up a variety of jobs, but there's no solution for when those folks end up being laid off or unemployed.
All right, next, please.
Thank you, Congressman. So I work in the field of cybersecurity, and we've historically had a pretty significant job shortage. I think right now any estimates would probably be over 1 million jobs within our industry that are not filled. And that's due to a lack of skills with that labor shortage. So in that regard, I think we're looking at cybersecurity usage of AI is really being able to put on an exoskeleton for our defenders, making them more capable, being able to conduct tasks that are much more efficient and defend our networks in a way that we're not able to do at human scale today. And interestingly, in the field of cybersecurity, I think we're actually providing a lot more job satisfaction to our industry analysts and defenders who primarily deal in very repetitive tasks.
Well, I appreciate your answer, but if I may, I'm posing a different question. You've answered a question associated with how well and how efficacious your business model is. My question has to do with the people who are displaced. How will they make a living?
I think that's a great question, but as a cybersecurity expert, I'm not sure that I'm the best position to answer that, so I may turn it to Mr. Stevens.
All right.
Thank you, Congressman. I'll talk briefly about how important humans are to housing, and then also offer how we can improve building the next generation U.S. workforce. In housing, ultimately where people are going to live is a very human-based decision, and we find time and time again, people want a real estate agent to sit across the table and give them advice on if they're making a good decision. And so in housing, we continue to see humans being very important. Outside of that, I think something that's come up briefly is we really need to invest more in training the next generation here at home to work on these models and help really improve them over time. And that—
Excuse me if I may, 100 million people, 100 million jobs, 100 million.
I've not seen that stat, but I certainly believe if we gave equal access of this technology that—
Okay, thank you. I think that your model is a good one, but we're talking about 100 million. Yep. Yes, sir.
It's a great question. The first thing that we have to do is be honest about the workforce transition that we're going to go through as a country. What we're doing in terms of our parties, we're trying to make sure that we upskill, reskill employees, and we're actually creating roles of the future. So we're trying to do our part to make sure that our workforce comes with us into the next generation. And then you also have to believe in the power of AI to generate new business models, new opportunities, and that's why it's important that we capture them here so that we can make sure that those individuals that may be displaced have opportunities in the future.
I have to go to the last speaker. Please, ma'am.
Thank you, sir. It's a very important topic and one that we care a lot about. Similar to our colleagues, we're very invested in ensuring our own workforce is the tools to be able to be successful. This includes our engineers using AI to be more productive. I would say more broadly is that we are seeing more job creation. We are seeing businesses grow as a result, and it's important that we invest in education at the lowest levels into elementary school to make sure our kids—
The chairperson is admonishing me. Let me thank you, Mr. Chairman, and simply indicate that this is a question that we have to give some serious consideration to
Gentleman's
100 million
time has
jobs.
expired.
I thank you, Mr. Chairman. I yield back.
The gentleman from California, Ms. Kim, is now recognized for 5 minutes.
Thank you, Chairman and Ranking Member, for convening our hearing today. Earlier this year, the state of California, where I'm from, they passed SB 54 that would unfairly regulate AI and impose heavy compliance burdens on companies. Now, states across the country are looking to this California model as a basis for developing their own artificial intelligence regulations. Therefore, there is an urgency for Congress to establish a federal framework for AI. That's why I support legislation like Chairman French Hill's Unleashing AI Innovation in Financial Services Act that would create federal regulatory sandboxes. Mrs. Manfra, if that bill is signed into law, will those federal protections be respected if you are simultaneously fighting a patchwork of restrictive state laws, particularly the anti-innovative regulatory framework in my home state of California?
Thank you for the question, ma'am. Yes, we absolutely think the need for a national framework is critical, and having to navigate a patchwork of regulations does not help either our company or our customers.
Thank you. You know, what has made America a leader compared to other countries is our philosophy of trying first rather than regulation first. So the longer we fail to act, the regulatory standard will be set at the state level, and the innovation will suffer. So thank you. Another area where AI has high value is in its application in the field of cybersecurity. So I want to ask you, Ms. Whitmore, by leveraging AI, how have banks been able to save time and protect themselves through cybersecurity efforts?
Thank you for the question. So I think one of the most measurable areas we see with financial institutions is actually the applications to cybersecurity, and in particular, measuring outcomes and how quickly we detect attacks and how quickly we respond to them. As we've seen the use of AI increase, we've seen ransomware attacks that have been completed from initial part of the attack to stolen data or encryption of data in 25 minutes. And we've worked with customers in the financial services industry who have taken a mean time to detect from 24 hours to as little as 10 minutes. And so those type of measurable outcomes are incredibly critical at our ability to defend financial services networks.
Thank you. You know, scams are an issue that I hear constantly about from my constituents. We know that modern financial scams are rarely isolated to a single app. They may start with a text on a phone, move to a fraudulent website, and follow up with an email. Mrs. Manfra, let me come back to you. How does Google connect the technical dots in the background to prevent those foreign scammers?
Thank you. We have invested a lot in this space and seen a lot of very positive results going to the ability to identify fourfold increase in activity that we are then able to detect and take down on a variety of our platforms. We do not want fraudulent or scam information that are sitting on our platforms or that are impacting our customers. So every day we are identifying millions and taking down millions of fraudulent ads, preventing scams, preventing phishing through the use of AI and ML technology.
So let's say if AI detects a threat in Gmail, how does that transfer across Android or Chrome to ensure that it is neutralized across a person's accounts?
Well, in some cases, we use common tools, and many of our platforms and tools reside on common infrastructure. So oftentimes, we're able to leverage that scale to be able to identify commonality. In other cases, we do have to use unique tools, but we are sharing the outcomes, the detections, the things that we're finding to make sure that other products and platforms are available to use that.
Mm-hmm. Well, thanks for your work on that. Let me quickly shift gear to AI. It has a large role to play in preventing financial crime as well. So, Mr. Cohen, I want to give you a chance to answer, how does Nasdaq utilize AI to address compliance and prevent financial crime?
So we were saying earlier that we have a leading financial crime platform. It is cloud-native, AI-enabled, and what we do is use consortium data to detect patterns that no single institution can do on its own. And we have 725 million accounts, and what we're able to do is reduce false positives and help investigators focus on real crime and identify real crime that is otherwise a drain on the
Gentlelady's
economy.
time's expired, sorry. I now recognize the gentleman from New Jersey,
Thank
Mr.
you.
Gottheimer, for 5 minutes.
Thank you, Mr. Chairman. AI is being used, as we all know, to detect fraud and stop seniors from getting manipulated, those especially who are targeted by scams involving deepfakes and other AI-powered tools. According to the FTC report released just last week, adults over 60 lost $2.4 billion to scams and fraud in 2024. Alarmingly, this is the same report that found that older adults who reported losing more than $100,000 increased more than fivefold between 2020 and 2024. Very grateful to Chairman Hill and the Capital Markets Subcommittee, Chairwoman Ann Wagner, for recognizing the importance of my Senior Security Act and including it in the VEST Act, which the House will vote on this week, to put new senior protection-focused cop on the beat at the SEC. Ms. Whitmore and Mr. Cohen, what specific safeguards should be considered to prevent and detect elder financial fraud and abuse related to AI? And how should industry coordinate with Congress and regulators and law enforcement and others to ensure those protections keep pace with rapidly evolving AI-enabled threats?
Thank you, sir, for the question.
Thanks.
So I think specific to the demographic you're talking about, education is a huge concern and really an issue. If we can raise awareness that these scams are being conducted and can create a level of education that doesn't necessarily exist at widespread today, I think that really helps with that. Additionally, what we're also talking about is visibility at large scale to protect the transactions on the back end. And that's where organizations like ours truly focus, is looking at the packets that are moving. So in your specific use case, we would be looking at the financial services transactions and ensuring that our detection capabilities are not facilitating those types of crime.
Mr. Cohen, thank you.
There's two important elements here. There's the public-private partnership. We need information sharing because these scams scale incredibly fast in the world that we live in today. And it shouldn't be that the elderly find out on Facebook from their friends about a scam. We should have this information sharing at a scaled level to make sure that we can prevent it and not just deal with it after the fact. And then the second thing is we can use AI to detect it at scale. Right now, what we're doing is we're coming into it and we're trying to deal with it on a one-off basis. We need the tools and the automation to be able to stop it the second we see it and not let it propagate through the system, and AI can help us do that.
Are we seeing that? Ms. Manfra, are you taking steps to actually make sure that happens from a Google perspective?
Absolutely. We are identifying, blocking, and taking down fraudulent use of our platforms, fraudulent postings, fraudulent ads, scams that are targeting various customers, phishing attempts. Gmail alone blocks 180 million phishing attempts every day. And so we are investing in AI as a critical component to being able to do that.
Thank you very much. Regulators have used innovation hubs and sandboxes to encourage responsible experimentation in other areas of fintech. I am personally very focused on this area. And for the entire panel, what features and guardrails do you think are essential for AI pilots to truly encourage innovation and protect consumers and communities in this space? Josh, you want to start?
Thank you for the question, Congressman. Well, I think these sandboxes need to be time limited. They need to be specific. And I think those are two of the primary sort of components that are at least not seen currently in the sandbox offerings.
Ms. Whitman.
Thank you. So I think we look at it from three categories. First is defining a risk-based approach with consistent definitions. The focus is on actual threats and not necessarily those that are hypothetical, and those certainly that are more high-risk applications. Second would be distinguishing between the developers and the deployers. And third is making sure that defense is a priority. So having voluntary standards, a framework that then looks at making sure we're protecting our most critical information and not getting in the hands of our adversaries.
Thanks, Nick.
Thank you. I would say briefly that laws stay in force, that we test responsibility in these sandboxes, independence checks still happen, bias testing and the like. And then last, I would add transparency is obviously paramount. Regulatory reviews consistently.
I agree.
Control, targeted, and time-boxed, and don't allow for circumvention of approval process.
Jeanette?
I agree with Mr. Cohen and the previous statements.
Great. Thanks so much. Yield back.
The gentleman from New York, Mr. Garbarino, is now recognized for 5 minutes.
Thank you, Chairman. Thank you all for being here today. As Chairman of the House Committee on Homeland Security, one of my top priorities is reauthorization of the Cybersecurity Information Sharing Act of 2015, also known as CISA 2015. It is a vital framework that allows for voluntary exchange of cybersecurity information between the federal government and private entities. From energy companies to major financial institutions on Wall Street, the private sector is the first line of defense against malicious cyber adversaries, and CISA 2015 is critical to ensuring those threats are not realized. Manfra, someone who previously served as Assistant Secretary for Cybersecurity at CISA, how important is the reauthorization of CISA 2015 to ensure our cybersecurity needs are met to combat AI-powered threats?
It's very important, sir.
Can you give me some examples of what could happen in the financial services space if CISA 2015 authorization were to lapse, like it did under the shutdown, but would lapse for a longer time?
So the framework that the legislation provides CISA to be able to share information in protected spaces with its partners to include financial services means that they are actively reducing risks in those protected conversations and information sharing environments. And so not having that is detrimental to those partnerships.
Yes, I mean, financial service companies, they're hit all the time with cyber attacks. They learn about vulnerabilities because they're the front line of defense. They can't share that information with the federal government. The federal government can't then share it with everybody else, and which means those vulnerabilities cannot be fixed, and we're just facing more and more threats, correct? Thank you. Ms. Whitmore, is our existing financial data privacy and cybersecurity framework well-suited for the current era of AI, or reforms needed?
I think we can, leverage existing regulation, but what we're really advocating for moving forward are actions that benefit the defenders and not the attackers. So the more that we look at streamlining regulation and harmonizing it, the better we make it for defenders to really focus on truly firefighting and not filing the, complexities of too much paperwork.
Yeah, harmonization. I had lunch with Jamie Dimon once, and he said more than 50% of his cybersecurity employees spend more than 50% of their time on compliance instead of actual cybersecurity defense, which is wild to me.
Yes.
So harmonization is another thing that I know I've spoken to the Chairman Hill about as something we should focus on here as well. Switching gears a bit, the mortgage industry has spent decades under federal oversight, starting with the Great Depression, when agencies like FHA and Fannie Mae were created to stabilize the housing market and expand access to home ownership, and intensifying again after 2008 financial crisis through the Dodd-Frank Act, and then the creation of the CFPB. Today, federal rules shape nearly every part of the mortgage process. Mr. Stevens, as AI enters mortgage lending, should we extend existing federal financial services regulatory frameworks to cover AI?
Definitely. Any law or regulation that humans have to follow, AI definitely should too. And I think to the first part of your question, AI has that ability to take on a lot of the administrative burden that slows everyone else down. If you shadow a loan officer, they spend hours just collecting documents, copying and pasting data. AI can do that so they can focus on the right decisions.
Absolutely. So what should Congress do to ensure, or maybe not do, to ensure that you can continue to innovate here?
I think national right-sized frameworks, we rely a lot on the RIST, AI management framework. And so anything that as a consistent baseline for all of our states will help us.
Are there any, and maybe it's the states, but are there any regulatory structures that are currently standing in the way of AI delivering on the promise to expand access to affordable housing?
It's something we could certainly follow up on. I think in housing, a lot of the regulations were written before the age of the internet. For example, we have a whole database at Zillow that is just mindful of when e-sign is allowed, depending on the state you're in. And so I'd say a comprehensive review of some of those older frameworks would be useful.
Yeah, if you could get us more ideas, that would be more detailed. That'd be
follow
great.
up.
And from your vantage point, Mr. Stevens, last question: how can building consumer products, how can technology and modernization, not more regulation, actually help lower the costs for buyers and renters?
Yeah, both the efficiency we were talking about with loan officers and real estate agents, I'd say also the democratization of data access. If you have a nationwide framework, that means we can give guidance about what home to buy across state lines, which many consumers consider all the time. If it's a patchwork, that means we have to build very custom models depending on the state you're looking in right now. And that kind of efficiency helps people make better decisions at the right price.
Thank you very much, and I'm out of time. I yield back.
Thank you. The gentleman from Nebraska, Mr. Flood, is now recognized for 5 minutes.
Thank you, Mr. Chairman. I really think about AI in really two buckets. Number one is it relates to entities that are already regulated in the financial services lane, whether it be by the Fair Housing Act, the Fair Credit Reporting Act, the Graham-Leach-Bliley Act, or statutes that apply to financial actors. And so basically what I tell people is, if we find you discriminating, we will fine you and we will enforce the law. In other words, if you're using AI to break consumer protection law or discrimination law, we need to ensure that our regulators are equipped to track and identify that. I have this idea that someday we're going to begin an enforcement action and the regulated entity will say, well, we didn't intend to do that. It was all in our AI model and this was the outcome. Well, we're not going to fall for that. Like if you break the law, you broke the law and you had a model that did it. But number two, we need to work together to identify these bad actors, these folks that use generative AI to scam people out of money, to let fraudsters fool people and steal their cash. And law enforcement needs to be able to respond to these threats. And we absolutely need the help of technology companies in preventing AI from being used by those who do it to lie, cheat, and steal. And so that's really where I come from on this. To all of you on the panel today, can you just describe the intentions with the interactions, I should say, with the regulators you work with on AI, both at the federal and the state level? And do you see in those regulators sufficient expertise in your counterparts in government to make you feel they're up to the task of overseeing this changing landscape? In other words, as you engage with regulators, do you feel like they have the tools they need to do the job given the changed landscape with artificial intelligence? And we'll start here.
We'll say those that we interact with, whether as customers or partners or regulators, I do think that they show a willingness and an openness to learn. I do think that, like many other organizations, they do need more skilling in this space and to be able to best focus on the outcomes, but also be able to apply that to new technology.
Mr. Cohen.
Just to frame your question, public-private partnerships are incredibly important, and they're what will keep us ahead. And so two things, if I could take the opportunity, the Cybersecurity Information Act, that needs to be extended, so we continue that on the cybersecurity side. And then in terms of the regulators and the way that we work together, we do feel like they appreciate the issues. There is a deep level of understanding around the issues. The one thing we worry about is regulatory arbitrage. So you need to make sure that as we go to the regulators, we do not want to go to the regulators that understand the least to try to get something approved. And that is why at a federal level, we're going to need some clarity there so there isn't regulatory arbitrage and people don't try to go to the regulator that understands the least.
Well said.
Thank you. I appreciate the question. I'd say certainly education could help when we partner at the federal and state level, but even more so, we see successful partnerships when they're outcome focused, when they're customer first, when they're transparent. I could sit down and explain all the fraud models behind Zillow rentals, but if we just agree that no customer should see a fraudulent listing or have a fraudulent payment, then we can collaborate even more efficiently.
Thank you for the question. So not only do we work on behalf of public-private partners within cybersecurity and all our counterparts on the government side, but also on behalf of our customers when we're investigating these major cyber breaches. They're then challenged so many times with the different regulatory frameworks that they need to report these breaches in. And so I think the one area I'd really like to share there is that more complexity never benefits the defenders who are trying to fight the fire and stop the breach, while they're also worried about the paperwork. So that really benefits the attackers, and I think the more we can streamline, the better off we're going to be.
Mr. Branch.
Thank you, Congressman, for the question. Many agencies have lost jobs due to the various layoffs. And so these agencies are playing catch up and are in a bit of a difficult position to try to enforce some of the laws. But also President Trump's AI action plan has predominantly been a deregulatory effort. And as such, the agencies are not really empowered to enforce some of the laws that exist. And then the last thing that I would say as well is that some of the sandbox bills that have been proposed allow the companies to sort of self-regulate. And so from that end of things, these companies are sort of guarding their own laws, and it's not allowing the regulators to essentially do the jobs that they're required to do.
Thank you very much. With that, I yield back.
Pursuant to the previous order, the chair declares the committee in recess. Subject to the call of the chair, we will reconvene immediately after the floor vote series. The committee stands in recess.
Committee on Financial Services will come to order. I would like to thank all the witnesses for their testimony today. Without objection, all members will have five legislative days to submit additional written questions for the witness to the chair. The questions will be forwarded to the witnesses for their response. Witnesses, please respond no later than January 14th, 2026. The hearing is adjourned.